Once we get above 618, again, we're playing the calls to 624. And then at 624, 625, we're going to play the puts going right back down again. This reminds me of when the market first ran above 500 in 2024. Let's go put it on the screen here. So again, you fill out the sky. 490, 456. That was only about $60, so it wasn't that much money. You fell right there. But then you ran up basically from 410 to 524. That's around $114. And then you collapsed from 525, 524. Remember, you were hitting 518 first and you were collapsing. So there's a good chance that today's just going to fall right back down. At least $10, $15. And if we're going to play the smaller end, it's probably going to only fall down around $6 to $7. The bigger end, of course, would be around 15. After we get that drop, again, just like how you got the drop over here, 525, right back down to 493. So that's about $30 of a drop after you just ran up $110, right? And then over here, you drop down 60. Ran down 110, which is about double. You then fell about 30, which is half of the first range. And then when you ran up, it ran up from 490. So it ran up about $70. So the next thing I want to do here is just look at how it fell down after 70, which pretty much just fell 50, 60. Almost 60, like 57, I think. You then ran right back into the sky from 508, straight up 100 and... It was just like $100, I think. Yeah, 509, just about $100. Now you're up about, from this area to the left side, let's say if Trump never crashed the market, from this low, which is 509, 508, currently you're around $110 as well. So remember last time you ran up $110 from a certain low. And we're not using this low because, again, that whole drop out the sky with Trump was a little bit more dramatic than normal. So let's just say we mark that off as like a one-off scenario, one-off situation for them being able to, tank the market that much. That's basically the idea here. And then we're going to have a whole different thought process for when we include this bit of data here while we're running up. So we'll do that next, but first let's just go look at this real quick. So after $110, you then fell down basically $30. We're only $7 away from 526. So if we run up that high, technically the high is now going to be around $120, 116. So I think that might be a little too much. I think you might actually collapse now. So from from 618 all the way to 624, we're pretty much going to be buying the yearly puts. So as soon as the market opens up, you're buying puts. A year out to 6 months out. If you can't afford it, again, the next thing you're going to do is look for options 3, 4 weeks, 5 weeks out, 6 weeks out. Whatever you could afford, just make sure that the strike price is around 580 to 590. My bad, I had to drink some water. As you all can see, I already have this drawn. The second it hits 618, it's going to want to collapse. We already have it drawn. We have it drawn multiple different ways, multiple different times, multiple different charts, right? Take, for example, this chart right here. New target above 611.84 is 618.04, and look at how that perfectly lined up with where the market pretty much just pushed you up at, or pushed you up to, right? Because we're currently at 617, 618. But the point that I'm trying to make right now is it's kind of funny because If you look at it, that's exactly where the market made you stop. And remember, we made this chart last year. So the second you get above 617, 30, 618 flat. The second you get above 618, it's pretty simple. Don't fight the trend. Just continue to play the calls going up. 625, 624 is the next target. Yo, I hate how cold water messes up my stomach. Ah. Okay, so 617, 618. We can delete all this. I already fixed all these charts as well, so that's kind of nice. We don't have to waste too much time on this. Let me see. I might have to take these out, but then again, they're kind of useful. I'm not gonna lie. $6.18, so that means this first point would be around the quarter point. Correct? The quarter point is gonna be, where is it? I think I just gotta go like this to it. Let me see. Yeah, there you go. Just so I can see where that line is at. So the first point that the market's gonna want to run to. Now, since you're above 613, the main target is gonna be 645. But logically speaking, of course, you gotta play one by one, level by level. And on my screen here, it's telling me instead of 625. It might actually want to run to 629 just because. So 629 looks to be the target. Of course, you have numbers in between hand, and that's kind of what I'm looking for. We don't really want to pay attention to these whole number targets as they're not that important. The most important thing is what's in between them. 1/8 points, 1/64 points. Like on my chart here, you can clearly see that the 132 point, 1 out of 32, is currently right next to this 1/16 point. It's right in the middle of it. And obviously, if I put a price holder on that, meaning if I put a little price label on that, you see how if I break up these two areas here, from here to 621, it's just like how I thought. 625 is in the middle. So the market's most likely going to reflect and revolve around this. If it gets above 625, we'll play the calls going to 629. So it's pretty simple. It's not going to be that complex at all, truly. What I'm going to be doing in the background is we're going to lock in the put. Of course, that's the first thing. That's the most important thing here. This is an insane price right now. If we can lock in these puts, this is quite literally crazy. Reversal 0.5 from previous day. Yeah, that's pretty nice. We could do a world market video. I would be fine with that. Last time we did one of those videos was, I think, in January, if I'm correct. Okay, so we got to put 8 days out. We got to put 25 days out. Next thing is to look for put 60 days out here. All the open interest is at 46 days out. So most people are buying the 46 day out contract. So that's the one we might stick to, honestly. The August contracts. I feel like that's our best bet. August, like 16th, August 15th. That's when I think that the market's going to finally bottom out. And we're going to start heading back up again. Logically speaking, if it takes the same time. Because we took 2 months to drop out the sky. We took 2 months to run back into the sky. So theoretically, you would take about a month to fall right back down to the midpoint. Theoretically. Even if it takes 2 months, that's, you know, in between 45 days and 60 days. So it kind of falls perfectly into what we're thinking. The strike prices we bought before were which strike prices? Let me see. 550. And then we got a couple for, okay, 560. Yeah, why do every single time I take a picture? I mean, obviously, it kind of is just a coincidence, I guess. But every time I take a picture or a video, there's always like a bird that flies in the video. Yeah, you know how tight I would be. He went on the train with his boy, and he knocked out. He waited for the train to start moving, and he started banging on the glass so he came out. Yo. All right, so let me see. 81 days out. How's the open interest here? Oh my God, wait a second. Wait a second. That's ridiculous. $46 days out, you still have a lot of open interest here. You still have around, somebody bought 44,000 at $600 for the puts. 45 days out. If you go to 81 days out, let me see how much they cost. Yeah, the open interest is way more insane for 81 days out, which is for September. The reason why people do that, by the way, is because when you buy stuff for September, if you're going to sell it in August or by the end of July, you're going to have so much extra intrinsic value that's just inside of that contract. You're going to have so much more momentum on your side. IV is going to be on your side. The delta, the theta, everything is going to be more on your side as long as you just get a contract that has more time to it. It's going to cost more, of course, but that's perfectly fine. especially when you run through the numbers, you always will end up making more money with an option that's 14 days, so about 21 days out, just because of the momentum that's attached to it. Which means, in theory, if you're going to sell your contract with at least 21 days of time left to it, it should basically perfectly match up to provide you with the best profit out of any other contract. Because you're waiting for that time to still be on the board, you're waiting for the value to get applied, and you still have plenty of days left to your expiration. It always ends up going in your favor, honestly. Because let's just say if on Friday, right, I bought an $80 contract. Those contracts, they're now going to be a little bit cheaper because you're going up higher. But I still have around 20 to 30 days left. So if I had to average down, I can average down today. I can also average down by the end of the week at 625, right? I have plenty of room to wiggle around with. Once you only have contracts that are expiring in a day, 2 days, 3 days, 0 days, you have no wiggle room. So it's like 90% of the time it ends up going against you, especially if you don't have the experience. Being an experienced trader here is the most important thing. And the only way you gain experience, again, is by trading as much as possible. That means using the paper accounts, using cheap accounts, using swing trading account. You have to literally just merge it and mash it up with everything. Of course, do one thing at a time. So if you don't have a lot of capital here, you should be focusing on 0 days to 5 day options. Once you have over $1,000, again, once you have over 1,000, I would just be buying contracts that are 3 weeks out, 2 weeks out, $400, $600, $700, selling it for just another $100, $200. You do that every single day for a week straight, and you're gonna double your whole entire account. Now you have 2,000, 3,000 to work with. It's just gonna keep growing nonstop like a wildfire. It's just you can't trade smaller dated options. You can't do that. If you do it, you're just going to kill every single account you have. And we don't want that, right? We don't want that. There's like a certain type of parallel line that's associated with the success as well as with the quote unquote failures. They're not really failures, but some people, just because they seen that they lost money to them, in their opinion, they lost point blank because they lost money. So for those people, it's going to be a little bit more difficult for them because they put too much sentimental value in being right or wrong just due to the fact that the money that they had is less than or is gone, which that's not the way you're supposed to trade. It's supposed to be a learning machine, like a robot that needs to adapt to become the strongest thing in the world. And you need to adapt. If you can't learn how to establish the component of adapting, and you can't get that repetition on your side in terms of growth, because growth is a repeating type of thing. It's not just you grow in one way and the next time you grow it's going to be that far off. It's going to rhyme with it, in theory, again, because everything rhymes with each other. So your growth should be a component of your driving force and of your daily, task in terms of setting up goals, setting up, dreams, setting up what you're going to buy, setting up things you're going to purchase to put you at a, higher pedestal. Regardless of what it is, it's a repeating, consistent thing. So just like you have instincts, it's basically the same exact thing. It starts becoming an instinct. And if you're not thinking like that, the idea of adapting and becoming a better trader, because the best traders, they simply have the most losses. Of course, their wins probably outweigh their losses right now when they get to a certain point. But I can guarantee you, before those wins outweighed the losses, they were down significantly. That's always how it works. Always the best traders lose the most. So, yeah. If you've been just losing nonstop, it's kind of a good thing, because it's basically making you succeed and making you level up quicker. than if you just were successful. Like, take for example me. When I traded my first month ever, going from 3K to 100K, it sounds like a lot of money. It sounds like, in what world is it possible for you to actually turn 3K to 100K? You know what's the funniest thing? Is I was cutting myself short every single day. I didn't know, I didn't have the experience. So even though I went from 3K to 100K, because I lacked the experience, the gains that I got were actually way smaller than what I could have gotten. Like, let me give you an example, right? Let's go to the daily compound interest calculator, everybody's favorite website. And let's run these numbers real quick. That's why I try to tell everybody it was amazing doing that, going from 3K to 100K, but I was the only person who was in my own shoes that was being like, damn, I know I could have did more. And I kept saying that every single day. And it was so frustrating because it was just like, why can't I never get the trends perfectly? You know what I mean? But this was my numbers. So in just 30 days, it was about 25 days actually. It was about like 3 weeks. So in just 25 days, I was only getting, what is this, 17%? Nope. 15%? Nope. 14%? A little bit higher. 15%? About 15% per day. That's it. That's it. So you got to ask yourself, most of those trades, they were 100%, 200%, 300%. The problem was I was using a small portion of my account. I was never using the whole entire amount. So because I was never using the whole entire amount, that 100%, even if I use half the account, like let's say if I use 1,500, right? If I use 1,500 and I double it, technically 1,500 turns into 3,000, right? So that means using 50% of my account, because you can't count the money you're using because it was already in your account. But from just 50% of my account, if I get 100%, it will count again just as a small little increase. It won't actually count as a double. So if I double 3K, obviously it's going to turn into 6K. But if I only double half of it, that's only 3K. Minus the 1,500 that I put in, that's only $1,500 of profit. Which means after, the first day, I would turn 3K into 4,500 in just one day. But here's the problem. I kept using a smaller and smaller amount every single time because I wanted to play it safer. So even though if I show you some of these gains that I got back then, the only thing you're going to see is 100%, 300%, 600%, 400%. And the part that sucked was I was only using a small portion of my account. If I was always using the whole entire amount, I probably would have turned that 3K into maybe around 500,000-600,000 because the way I was trading was correct. It was intrinsically correct every single day because I was always looking for just a small little gain with a small amount of money, which allowed me to hold things a little bit longer than normal. And I always had 5 to 10, 15 days of time on my expiration. So let's say if I bought a contract at 300, right? If it falls to $50, I would buy like 10 of them, and I would bring my average down from, basically 300, 200 each or $100 each. And I would bring it straight down to the number I just bought it for. Because think about it. If I buy one contract at $300 and it's at 50 and I buy, let's just say 30 contracts at $50, I can guarantee you my average is going to be like 51, 52, 53. And then think about it. It then runs to 60. You're technically profitable because you bought a shit ton of contracts at the bottom. So by the time it just flicks up a little bit more, it doesn't even have to get to $300 no more. Because again, you've brought down your average. So in theory, your average is now, let's say $52. You go to 60. That's $8 times how many contracts you had. Let's just say 31 contracts. $8 times 31, that's your profit. And that's not a bad number. That's a pretty good amount of profit, What is the number on that actually? 8 times 30 times 31, actually. Let's do the math. 8 times 31 equals $248, which means you probably bought, let's say, 50 of them times 30. That's $1,500, and then the initial amount was $300, so you're in for $1,800, and you basically take out around $250, $300. So of course, it's not an amazing trade. It's kind of stupid because you have too much capital inside of one trade, right? Just to make only $200. However, you got yourself out of that deep hole you just dug, and you technically just saved your account. If you can understand how to save your account every single time, and usually it's through aggressively averaging down, you will never take a loss. You might have a bad contract. Your contract might be going down all day. I agree with you. But the only way to fight against that is to buy a crazy amount of contracts. And when I say crazy, if I'm putting $1,500 into something where I put $300 into it already, I have to at least have another $6,000 to $7,000, you know, just in case. Most people, they don't have an extra $6,000 to $7,000. They see it drop from 20 to 10. They put the rest of their money into the market. A couple minutes later, it's now at $5. So, sorry, the damn bunny just jumped on the bed again. She gets on my bed and just starts tearing apart my damn pillows. What is this? What are you doing? All right. So, like I was stating before, when you're able to use less money, you're always going to basically have a safer way of getting out the contract. Unless, again, you overdo it, but you're not going to overdo it. That's the thing. Because when I tell you to average down, as well as I'm pretty sure you all know by now, the best points to average down, you can get yourself out of any, deep situation. It's just you got to have the capital for it. So, all right, now we understand that whatever money I made, even though this was the first month I ever options traded, and it looks cool and it looks amazing and it sounds crazy, it was only 15% per day. Every single one of you make around 50 to around 30% per day logically. For the highest winners in this Discord, they make about 100 to 200% per day. So you guys could do the math, Every single person here technically is already a millionaire. That's the first thing. That was the concept that I was trying to overlay to you guys. Every single one of you already have the tools and the knowledge to actually get yourself to that number. It's now just a game of tug of war, pretty much. You're going to pull on that rope, the market's going to pull some profit back and take some of your account. You're going to pull it back, the market's going to pull it back again. You're going to pull it back into your side, then the market's going to pull it back again. It just keeps going back and forth, back and forth. So as long as you have the mental fortitude to continue here, you're never going to lose that game of tug of war. You're always going to hold your ground, real firm. And that's what I want to see from everybody here, is be able to hold your ground when I'm not looking in your direction, when you know you might do a stupid move. I do it all the time. We all do it. Just try to minimize the illogical moves. Because it stems from you wanting to improve yourself, which is why I don't want to make you feel bad about it. We all do it because we all want to improve ourselves. We're all curious, right? We all kind of want to go into that unknown territory and just learn what we could do for ourselves. Learn how far we could take ourselves. And usually, you're going to have to just minimize the bad moves. So only 4th reversal setups, only CS zone setups, only setups off the supply and demand zones. Let's start to minimize the amount of contracts we're buying into. Let's just buy 1 or 2 that cost $300, $400, $200. I love staying around contracts that are $200 to $300. That's my favorite thing. $200 to $300 contracts. I could buy like 5 of them for $1,000. If I need an average down and it drops from $200 to $100, That's not that bad. I only have to put in around $500 to then average down and double my contract. So it's not that bad. Of course, if I want to add a bunch of contracts, you're going to need a couple thousand. But the funniest thing is if you could get yourself to around 3 to 5K, it's almost impossible to kill your account. The reason why I say that is because even if you buy something for $200 and it drops to, let's just say, $50, right? If you average down with another, let's just say $1,000, you're only in the trade for around $1,200, and you most likely average down at a really good location. So at least you could hop out of it 10%, 20%. And that's the craziest part, is you're never going to put over, you know, a certain number, but you're going to have enough capital so that you can get yourself out of any situation. That right there, that's the recipe. Have enough so that you can get yourself out of any situation, but have enough time to the contracts. Only buy at DARP, supply and demand zones, reversal points. They always work. Every single one of you have been shown that it works for over a year now, consistently. Even on the days where it doesn't work, a different section of that trading style is working. So it's like, while it's going from a territory of working to then not working, we can see the conversion and we can see the change inside of the, you know, the momentum to be like, all right, it's doing this again now. Or maybe now it might switch into that type of a market. Because right now the market's extremely bullish. Extremely bullish. And the only reason why this market's extremely bullish is because, like I was telling you guys earlier, what Trump did in terms of tariffs was, in terms of the reaction, right? I don't want to get into the political side of stuff, right? But in terms of what that reaction did to the market, it was completely, you know, just BS. It was a lie. It was like a false move. It was like a wick that you see at 3 a.m. You know, it drops $20, $30 down. It was too dramatic, way too dramatic. And it's kind of funny because all it did when it fell down was hit a level it was supposed to hit in the summer of last year. So what that basically means is the ideas that I have for this market crashing out the sky, it already had occurred, which is the wildest thing. It occurred within 2 months. However, I think that there's going to be a greater drop out the sky. I think that we're probably going to, you know, really tank out the sky. And the first level that you usually fall from is the 20s. We're at 18 right now, 618 to be exact on SPY. So I would say save some capital for 620, just in case. You got to buy some puts at that level. We're going to buy it for a month out. Once you get to 620, and then that's pretty much all, honestly. We have a really easy day here for ourselves, honestly. So no rushing. Don't do something illogical. Let's go take a look at SPY now. Let's see where we're at. So we started to fill some of the gap already. As long as it could just stay right here and not drop too much lower, this should be perfect. Okay, so let's see here what contracts we're going to buy into. We can also check some other names, right? We're going to get some puts for SPY. Look at NVIDIA. Wait a second. I forgot to look at NVIDIA. Where's NVIDIA at? There's no way. You barely even ran up anywhere. You didn't do nothing. Yeah, NVIDIA's already peaking. Intel. Are you going to fall now? Intel looks like it might be starting its next official uptrend here. The only problem is you have a weird wedge that's forming. So look, let me explain. Look at the last low that Intel had, the lowest low, and then look at the wedge that it made, right? You see how it kind of broke beneath it? That's what I'm worried about over here. Because has Intel truly changed in terms of its company structure, or in terms of being a company that's now worth what it was worth before, with all that extra momentum dissipating? I don't know necessarily. I haven't been looking at their balance sheet or their earnings, so we're gonna have to start paying attention to that next. However, the one thing we do know is this is one of the OG companies, right? They're still making an impression right now. They still have a bunch of technology that they're trying to advance. Some of that pieces of technology, some of those portions, it has to deal with semiconductors. So what Intel is trying to do right now is, for the past 20 years, 15 years, they've been trying to come up with something called, I think, it's a SL bridge, I think they call it. SL bridge. Maybe it's not called SL bridge. It's called Bridge Intel. No. What is it called? Danny knows. I forgot what it's called. He was telling me about it when he worked there. Intel. Let me see. Intel. Bridge program. It's called careers in rapidly. No, that's not it. That's not it either. We'll ask Danny when he pops on here. I'll ask him. But basically the technology is for semiconductors, and it's to advance semiconductors past the current technological barriers that they're having right now. So with semiconductors, our technology is only going to get a little bit better, truly, because there's just no way you can make a smaller semiconductor right now, at least with the current technology. If they start diving into other, bits and portions of technology that already exists and they incorporate it, which is what Intel is trying to do. That's like their goal right now. This company, of course, if they figure it out, they will be worth more than any semiconductor in the world. So that's kind of what I'm looking for right now. There's a race, basically. There's a race to find who's going to create the next technology for semiconductors and who's going to implement it first. Not too sure. It probably will be NVIDIA because of how much money they have right now. They could just throw in, a stockpile of R&D cash flow just to start, adding a little bit more to the research and development department. And they could probably figure this out, especially if they take Intel's technology, because you already know everybody just steals each other's technology. That's what they all do. So whoever makes it, as long as they just stay real tight-lipped, which is probably not going to happen, I'm telling ya. The second a company figures this out, this is going to be one of the loudest things you hear in the world. More louder than even AI, because semiconductors create AI. That's what you put in all the machines. That's what you put in your microwave. That's what you put inside of an AR-15. That's what you put inside of a tank, inside of a battleship, inside of a helicopter. Semiconductors, they go in everything, pretty much. So that's the problem. We have a couple bits of technology that are getting, dramatically advanced within the next couple months and next couple years, and we just got to stay on top of it. Because these are going to be our Tesla plays, our one-hit wonders, we throw in 5K into something and ignore it because we know something the whole world doesn't know type of thing. You know what I mean? That's what we had to start investing into. Because then we'll have 1,000, 2,000, 3,000 different companies that we all could look at, which means we never run out of investments. Like, imagine that. Every single year, we just need one or two good names, and that's it. It makes your whole entire year. And then with that extra capital, you diversify that with 10, 20 other names that have the same potential, and your career is you already wrote your own career. Your success is pretty much done at that point. Your money's just going to keep doubling and doubling and doubling. It's just you have to be able to have a keen sense of smell when it comes to looking at these companies. You could tell when something is going to lead to the demise of a company. It's very easy. As long as you're logical and you're not just full of emotions and you're allowing that to trade for you, you're always going to actually be at the cutting edge of success. It's always going to happen your way. It doesn't, in fact, stop happening until you start losing your mental state or other life things drag you out of that high level of frequency, that high level of operation. That's the only reason why people start going downhill, because something's dragging you out of that frequency. So as long as you can operate at a level where you understand something is going to remove you from that higher level, you can document that higher level. You can talk about what you see, what you smell, what you hear. I know it sounds a little stupid, but if you think about it, if you can document what you're like when you're operating at a high level, you actually will always put yourself in that, that level of operation. That's all I want for you guys to be able to do here, is have a nice, keen sense of smell. That's it. You gotta be able to smell it out, because they're always lying. I'm telling you. Even the good companies, every single one of them are lying. I think we all know that. They lie about everything. Nvidia lies, Tesla lies, Apple lies, they all lie. We just got to figure out which ones look like it might have some issues so that we can avoid them. That's the reason why I don't like investing into Amazon. Amazon is amazing, honestly. It's one of the best companies in the world. But the way that board controls Amazon, it's like a bunch of I don't even know how to say it. The way they control Amazon and they try to grow it is just, it ain't it. It's not good at all. They're doing decent. They're doing fine. Obviously, the company's worth a lot of money, but yeah, we kind of want to avoid Amazon. We want to avoid. It's crazy. I think Amazon is my best charts too. That's why I'm telling you. Like, it's like Amazon plays catch up with everything else. That's just the main reason why I don't like them. Like, look at their trends. You can make good money here. You can make fantastic money here. But I would much rather you take your money and not put it into a name like Amazon and put it somewhere else. I wouldn't even say to put it into Apple. I wouldn't even say to put it into the top 10 stocks, honestly. I would say to find something that has way more potential, but that's listed on the S&P. You know what I mean? So it's listed on the S&P, and sometimes you could find companies that are not listed on the S&P that will get listed, and that's also another little reason for you to invest into them. Kind of like Palantir. When Palantir got listed, when Tesla got listed to the S&P, those things were like rocket ships. I still remember the day that Tesla joined the S&P 500. I still remember that day. That thing was insanity. You couldn't slow it down. It was just going into the stratosphere, to say the least. And yes, I was playing calls. With Apple, Apple's a good company. It's just Apple's a little confused. With all this tariff stuff that's going on, yeah, Apple hasn't been doing nothing. It looks like it's going to play catch up, though. It looks like it has some more potential here to run up to at least like 230, 240. Tesla, yeah, we're just going to leave Tesla alone for now. We got to let this information just dissipate a little bit. I'm waiting for our next set of just news and data, and then we'll start playing Tesla a little bit more. And the same way we've done it before. We'll just rinse and repeat it just like before. It's just right now, we played it so much in the last 2-3 weeks. Just so we don't get ahead of ourselves here, we're going to put it in the sidelines, put it on the side burner, and not mess with it too much. Because we already made a bunch of capital. There's no reason for us to take a loss right now and do something that's a little, I don't know. I was going to say advantageous, but I don't think that's a good word for this. But you know what I mean. We're just going to take a step back, see how the trends are reflecting upon themselves, see if we're still getting similar reactions. Like, for instance, if we fall down to here, maybe we could buy again. But maybe since you hit it twice, you might not just fall down to here. Maybe next time you might actually fall down to here. So that's why I have this drawn, is because you already hit this area here 2 times, right? So if you're going to hit the same area, of course it could do that. Tesla loves consolidating like this right here, as you can see. it definitely could just fall down and hold here. But if I'm trading and I have a bigger account, I'm waiting for that better, more dramatic, more annoying, more just a bigger entry, you know? You want things to get worse than what it looks like. So whenever I buy into an option, what I usually do is I have a first area where I'm just like, all right, now I might buy it. And then there's always that S plus area where once I get into the option, every single time, the next 2, 3, 4 days, we're up instantly, automatically, every single time. It's just to get into those entries, it takes more patience, to say the least. Like you're having to wait 2, 3 days, then you can buy. Then you need to wait now, maybe sometimes a week. Then you can buy again. And then what if you wait? You're like, all right, I'm going to wait another week now. But then the next day it does that crazy move. Well, there you go. You found it. What did you find? You found how there was a consistent trend. You were waiting. You were buying. You were meticulously moving around the flow. And then when you noticed that within one day, you did something you normally do within a week, it probably means you should take a step back and not trade no more. You understand? So there's ways for the market to do a certain move where you're just like, all right, wait. That's too much. That was too dramatic. Let's take a step back here. Let's see what's going to happen. That's not going to, result into a mistake. That was the one way where I was able to get out of any play and not buy into stupid things. Because if you keep running it back and you keep doing the numbers, of course, before the market opens up, don't put yourself into the damn driver's seat of a F1 race and it's your first race. That makes no sense. You're going to hit something. You're not going to know what these buttons do. You're not going to know, how to change whatever it is, tires, whatever it is, whatever has to do with the car. I know you're not changing tires as an F1 driver, but you know what I mean. There's these buttons on F1 cars where it helps you basically take right turns, left turns quicker. More of the arrow will pop up on that side, you could say. You might even get more slippage on one side than the other, more control. And with that being in mind, you can kind of understand what I'm trying to say here with F1 cars. The driver's still doing a lot, basically. So you must learn how to drive before the market is open. And you must come up with your plan before the market is open every single day. If you're not coming up with a plan, you're not writing down your notes, I promise you, you're going to get run over. Simple as that. Because you didn't theoretically plan for something that you're about to race in, Just doesn't make sense when you really think about it. So that's how I want you guys thinking. That's why I always require the notes every single morning before the market opens up. Because that tells me you're prepared. That tells me you're ready to race. And you're not going to make a stupid, mistake. You're not going to call me randomly in the middle of the day and be like, hey, Silo, should I get into this or should I get into that? Listen, buddy, you're supposed to be hundreds of miles ahead of where you're currently at. The race already started. And now you're asking me where you should go for the race. Again, needs to have some, we need to have some more proper preparation here. Because, yeah, we're preparing good. We know what to do, but we need those notes. Even from people that join in from the YouTube, if they start joining my live stream later on within a couple more months and they don't join and the first word they say is not their notes, they get instantly just banned. That's it. I'm not looking for people. I want to teach people. People will look for me. And that's how it works. So I need everybody to operate at a certain level because then we can kind of remove the inconsistent nonsense and everybody can operate at the same level. Because everybody does truly operate at the same level. It's just some take more time to get to that level. But we all can operate at the same level. We're all human. If you run 100 marathons with the best runner in the world, I promise you, you're going to become one of the fastest runners. I can promise you that. As long as you have, the skeletal functionality of it. If you swim with the best swimmer in the world, you'll become one of the best swimmers. If you drive with one of the best drivers in the world, you will become one of the best drivers. It just makes sense. So, yeah, we just need to trade at the same level or at least trade with somebody being at that higher level, which is everybody here. Everybody here combined, we create that top trader in the world. It's everybody here combined. That's how it works. It's not just me. It's not just one of you. It's everybody here combined creates this top level of trading. That's the idea here. So as long as we could just be there on the same page, whenever you need help, just tell me the night before. Call me the night before. Whenever your charts need to be set up more properly, whenever you feel like there might be inconsistencies or you're having problems, just always call me. Every single one of you have my phone number, my personal phone number, not a Google voice assistant or an app. This is my personal number. So you can call me whenever. I always get my phone calls. Sometimes if I'm trading or if I'm talking to somebody else, I'm most likely not going to reply to you until I'm done talking to that person. I can't really multitask if you guys couldn't tell. I'm really bad with multitasking. It's just I do something so quick that I can do a bunch of things. So it kind of looks like multitasking. But no, yeah, I suck with multitasking. I'm terrible with it. That's why I need to have my charts planned before the day begins, because it's just like I can't be having to, you know, fix up the charts and then tell you what's going to happen next and then it be actually correct when I'm making it in the moment. It's very hard to do that. But with how much we've done, how much work we put in, I apologize for screaming, by the way. With all the work we've done here, we don't really got to do much. All I got to do is update the charts every few days, and that's it. It takes me about an hour. It takes me about 30 minutes. The other day, I think we took 2 hours, and we updated all 500 charts. If you guys are still not updating your charts, it shows me that you don't want this. If you don't know how to update your charts, that's a different story. But if we go down that route, we would both come to the conclusion that, yeah, you probably should have messaged me or called me before. If we're still having to say that, because I swear to God, every single time I talk to you guys on the phone or privately, you guys always tell me how I probably should have called you before. There shouldn't be no more probablys. There should just be doing. So if it happens, don't worry about it. I'm not going to get mad at you. You're human, just like I'm human. You make mistakes, just like I make mistakes. But, no, yeah, I'm just going to keep being a little bit more loud with it. Just call me. Any single time, any single day of the week, any time. You can call me at 2 a.m. and I'll answer. Just call me. Don't forget, though. Okay, so let's see the notes here. Did everybody post their notes? Let me check. We got Fish, excellent. We got Will last night, excellent. And that's it. So come on. Everybody post your notes. You still got 30 minutes. And then, yeah, I need to fix up this server. So I'm going to hop on to that later on today. All right, anything else that we had to plan for? Once you get above 618, we're playing calls to 624. You could buy a 5-day if you would like. That's not a bad idea. Of course, the market, the value, the momentum right now is extremely one-sided. So if things shift, of course, your contracts and everything else is going to shift with it. So, yeah, just take it real slow. Real slow the first 30 minutes. Don't rush it. Just get your leap plays. Lock on some 0 days maybe for a few dollars just to test the first 30-minute flow. And then at 10 o'clock to 10:30, 11 o'clock, we're going to have our biggest trades around that time. But you need to be patient, of course. Don't rush it. The trades will always come to us as long as we're patient. It took me 3 years to learn that. I kid you not, 3 years of me trading SPY for over... How much days is that? I mean, just say 3 years. It's about 200 days, 180 days. If I count vacations, I was probably trading SPY for the last 400 days in a row, 450 days. Non-stop. That's how long I've been trading SPY. So we're at a pretty good level right now where we can understand things beyond the normal person. It's really fun, honestly. Like, there's a certain there's like a certain, how do you call it? There's a certain path of success that when you actually start seeing it and knowing it, like, oh, wait, I know how to deal with this situation. I know I have to wait for that EMA touch. And then after it touches the EMAs, it hits the yellow line. After it hits the yellow line, boom, sometimes it likes to hit the VWAP. Like, you start remembering these things. And what happens is it starts to become a lot of fun. Let me tell ya, like, the process of learning, not the money, but the process of learning starts to become so fun that there's hardly anything in the world that gives me this much excitement. It's like, imagine having one of your best friends be extremely good with, what can I say? Imagine one of your best friends being an engineer, right? And because this engineer, because he operates at a certain level, imagine when you learn some of the advice or some of the information that he has to offer. The way you level up and the way you get to that next level, it feels pretty awesome because you have somebody there that's at a higher level of you. He's way higher. He knows how to operate better. He has more experience, more time. When he shares that bit of whatever information you're learning and you start to become a little good with it, as long as that person was very dedicated and he sees your success now, what that's going to cause him to do is put more time into his craft. And you have this situation where it's two bright individuals continuously clashing minds, getting stronger and sharper and stronger and sharper. And it's crazy, but that's what it feels like here. That's honestly what it feels like. So it's pretty awesome. Pretty awesome, because there's nothing in life like that. Usually life becomes very, like, for instance, if you're an engineer, right? You're going to get to a certain level of engineering where you're at the top of that echelon. You're at the top of that sector. You know what I mean? Like, you become the best. But when you have two people that are consistently leveling each other up, it's very difficult to become the best because, your boy down the street, he's about to pass you any day now. So it creates this need and want to level up that just doesn't exist anywhere else. In any field, and any job. It's crazy, to say the least. But no, yeah, that's one of my favorite parts about doing this every single day with you guys. Because then I start calling you guys, and I'm just like, all right, what do you guys think about this? Or what do you think about this? And then we're chopping it up for like 30 minutes, looking at the news, looking at the events, looking at some crazy report that came out, looking at the Twitter. It feels like a treasure hunt, And no matter how good a person gets, that's the one thing I will always be humbled by. No matter how good you get, I don't care. The market will always humble you. The market's always faster. It's always smarter. It's always quicker. Every time you get a little bit better, it's like the market gets a little bit better. It's like the weirdest thing in the world. It's like, wait a second. I just learned how to trade a certain type of way. I try trading with that way next week. Market steamrolls me. Yeah, that's fun. Let me tell y'all. All right, so the first thing we're going to do here, again, is lock in some puts. We're going to lock in some leap plays. I'm going to make them cost around... It matters what the first contracts we have, what they cost. Because if it just costs $40 for the $80 contracts we bought, we're just going to buy another $80 contract right now. Yo, I slept for 10 hours last night. I got home from the beach. I ate a little bit of food. I was gone. That was the longest time I think I've ever slept. And like, probably since the beginning of the year. That's why I feel so energetic right now. I feel like we're about to take over this. You were fishing 4 nights in a row? When you go fishing, John, what do you bring with you? Do you bring like speakers with you? Do you bring like solar panels? I gotta get some of that gear ready. Oh no, yeah, sorry about that, Will. I apologize. Bro, I came down with the food. I was talking to my cousin. I was gone. I apologize, Will. If anything, call me in like 30 minutes. Once the market opens up and I lock in everybody's plays, just give me a call. We'll start going through everything here. Let's put some music on now. Let's see what we got. What do we got? I'm gonna have to mute the YouTube. The desktop audio. No copyright for me today. I think you can even hear it through my mic sometimes, but the music is loud. Oh shit, wrong button. You could feed 100 people from this weekend. You used to take TV and DVDs on the boat, but your boat's too small. I see what you mean now. So yeah, with supply and demand, it's so many different types of videos. It's about 10 videos in total, and it's all inside the supply and demand zone section. If you need it, of course. If you can't watch the video, just let me know, and then we'll go from there. Same thing with anybody else who needs videos. If the video is locked, or I made it private, just let me know and I'll unprivate it. Are you guys getting excited now? 13 minutes. Let me check something real quick. I want to check the cheap options that are like 2 days out. If we get a put for like 2 days out, let's see if we could buy this. There we go, SPY. Alright, let me zoom in now. Let's go ahead and fix this. We're on the 5 minute. Yes, we are. Maybe we'll open up at 618.01. Hopefully, we can open up that high. There's no way. There's a company that went from $16 to $90. Right now they're sitting at $17. All in a matter of a week. 13th they were at the floor. 17th within 4 days they went to 90. And then by the 23rd they were right back down at $18, $16. Give me 1 second, everybody. All right, everybody. So the first thing we're going to do here is, again, look at the SPY puts. SPY's already fallen. Look at them 25 days out. Open interest is very low. Let's go 46 days out. Open interest is perfect. You already had some people buying. 8,000. Okay, so they're buying a lot of these puts. 550, 560. So the first thing I want everybody to do is look at the 565s. If you have a little bit more capital in your account, meaning you have around 300 to 400, I would buy a 580 that's 46 days out. So again, 46 days out, a 580 costs $360. That's the first thing I would do here. If you don't have that much capital, we're going to go for something cheaper right now. So I would go, let's look at 18 days out real quick. Open interest is not bad. It's pretty good. These contracts you can get for around 18 days out, and you could potentially buy a 600 for around 250. 41,000 open interest. And besides that one at 41,000 open interest, you have another one at 21,000 open interest, which is for 595. That costs around 190 for 18 days out. If you still don't have that much capital, again, we're going to look for 7 days out now. 7 days out, the first thing I would do is I would look for a 608 or a 607. These cost around 120, 130. And yeah, I would probably buy a 606. 606s they look pretty good. They're around $100. So again, 606 put for 7 days out. Next thing I would do is let's look at some 0 days here. Give me 1 second. Let's let this market trend a little bit here. If you get beneath number 2, remember, just slow it down for a second. It's all right. Okay, let's look at this right here. I'd rather look at this here instead of on my phone. That way you guys can actually see it here. You're filling some of the gap. Remember, when you fill half of the gap, you're going to bounce. When you fill half of it, it's most likely going to bounce here, everybody. So for calls, the first thing I would do is when it's about to basically be at 615, I would be looking at calls, and then I would try to buy 615. You might run to 618 again. So I would buy like a 618. Once you fall to 615, you could buy a 0 day that's for 618 at 615. Again, wait for it to drop to 6. Don't buy it right now. You better not buy it early. Again, do not buy it early. Just give it a second here. Okay, so 615. For 0 day puts, it already fell, so that's the reason why I didn't say nothing about the puts. As long as you had those, far out options, you're chilling right now. If you're trying to go with something 0 day, even though it's still could fall to, 615, 616, it might stop at the quarter point though, which is 616. So that's why I'm not going to force it. But let's just say you still want to get puts. You could buy something for 614. You're probably going to make about 50%. So you'll make easy 50, 60% right there. Or the market might bounce right now because you're at number 2, which is the reversal points. So that's why, again, I'm telling you, I'll wait. Just give it a second here. Don't rush into nothing right now. Right now I'm just staring at the volume, and I want to see what contracts are increasing the most for the puts and then for the calls. For calls, 618, you still have 17,000 volume. You have 15,000 at 620. So you could just straight up run from here to 619, 620. You could probably do that today if the market's going to hold down here. So again, if this market is going to actually hold, first thing I would do is wait for half the gap to be filled. The next thing I would do is then look at where the 200 moving average is, and it kind of perfectly matches up with the halfway point. The next thing I would do is look at the reversal points, which is on the right side of my screen here. You're just beneath number 2 now, so you can continue to play puts to number 3 and 4. That's how some of our members in this Discord play puts and calls, is when you get beneath number 2. They'll wait, they'll give it a second, they'll hop into a put. It's 2 strikes out, 1 strike out, and they'll literally wait for a 50 cent to 60 cent drop, sell for 20-30%. They do it every single day. So you guys could probably steal his trading style. Don't tell him. No, but that's the fun part about this, is if you guys put this stuff on your screen here, which we're actually going to have to fix by a little bit. So we're going to have to fix this by a lot of bit, actually. How much sense was that off right there? We had it at the orange line. I forgot to move it. So technically, we're actually still above number 2. Technically. Beforehand, before I moved it, you were still above number 2. So again, it was still pretty much in the same spot, honestly. Just pretty much like 20-60 cents off, which is a lot of money. Don't get me wrong. That's like a 20-30% trade right there. But if you're buying calls here, expect this to hold and run straight into 618.79. So if it holds here, I'm just letting you know you're most likely going to do an equal reaction and run into the same upper area, which is right before number 2, just like how you fell down and you're holding right before number 2. So yeah, there we go. Slow it down for a second here. When you hit 615, we already gave you the proper call. We told you we're probably going to buy into a 614. If it continues to head lower, and then if we're trying to play the halfway point on these boxes, we're just going to buy a pretty much a 618. 618 will work out really well here. 618 should drop down to, let's see, what was the price a couple minutes ago? They were at 64. The 618s, they're already at 82 right now, just because of that little pop right there. If it can continue to fall down just a tad bit more, you could probably see these contracts at around $40 here. So again, as long as we can get that touch of 615, you're going to see about 2 strike prices change, or about 1 strike price once you get into 615. And then once you get beneath 615, which is right around the same area, it's a little bit more than halfway. So this might be a little, it might not happen basically. If this happens, I'm just letting you guys know, if number 4 gets hit here, that's the 75% point of the gap. So you're most likely going to run at number 4. I'm just not too sure it's going to want to run all the way up to the top at number 4. If you come down this low, you might just want to hit number 5 just to fill the whole entire thing, land in this area, and then just spring right back up into a new high. Because remember, when I was showing you that chart of what SPY did a couple months ago, let me go put it on the screen real quick. Let's go take a look here. What chart should we show you? I could show you this one right here. This is a little bit more simple. So when SPY was running up over here, do you see how every single time it hits 618, 619 around this area, it just collapses? The first time it did it, right? It's all just psychological numbers. So After it did it a couple times, you see how then it finally broke above it. That's all I'm looking for right now. Is it going to break above that area right now? Or is this basically just going to run into 624? So yeah, I'm thinking you're probably going to fall right now. And last time you fell, look at this, $10. You ran up against that level, you once again fell $10. A couple days prior, you fell from 514 straight down to 505. That's around $10, $9. A couple days prior to that, you fell from 510 straight down to 505. That's around $5. After you popped over here, when you fell down right here, that's 615, $5. Do you see how funny that reaction is? So you're getting the same reaction right here and right here, and then you get a $9 reaction, and then you get a $10 reaction, and then is this one bigger? I mean, it's pretty much the same thing when you react going down to here, so it's still another $10 reaction. So 9, 10, 10, and then back to 5. That shows you the acceleration of a market and then the dissipating trends. And you know what's the funniest thing? If you look at what's next in terms of the dynamic of the trends here, that occurred, and then look at how this occurred right after. And look at how it's about half of the size of this right here. So the market's always, reacting off of itself in this weird kind of numeric way. Please don't step on the keyboard. Here, you can sit right here. Nope, okay. Go to your bed. Go. But no, yeah, so that's basically what we're trying to get you to understand here. This is the acceleration and again the compression of a market. It accelerates, compresses just a tad little bit, right? Not too much. All these drops here, as you can see, they're about a little bit more than half of the total size, but they're not that same size of this from there to there, right? We all would agree. This is kind of compressing a little bit. It's kind of like, tightening up. And the funniest thing is when you see that reaction, usually one of two things occur, which is the market falling out the sky. When you see the market get very quick and then slow down, the next time you see it get very quick, just pay attention to the direction it is going. Because oftentimes you can actually dictate something gigantic is going to happen right after this small move here. Because think about it. If you were trading all the way over here, you were probably having a terrible day. Trends weren't really working out. They were being annoying. And then you woke up the next day at open and you're up and you're just like, damn, should I sell it? Maybe I should hold it for a little bit longer. You hold it for the rest of the day and it's all gone. By the time you even hold for this morning, so much value is lost because of these drops that you pretty much are still down at open now. And you're still going to hold it because you want to see if this is going to go up higher. And then look where it does right after. Slams down, but then it gives you some hope. Let's say for people who had 10 days out, these people who bought calls up here, they would have still had an opportunity to get out their contracts. And that's what I'm trying to explain to you guys. Even if the market gets really quick and it's against you, it's perfect. It's actually fine. It's actually better than fine. It's like secretly it's working out in your favor. You need to understand that. Because if a market is getting quick, if it's getting fast, if directions and, the trajectory of where you're going is becoming more and more bearish, it simply means that there's going to be a snapping point. That's the reason why I teach you guys how to be reversal, traders. You're only trading market reversals. It's so vast. It's so vague in terms of just the idea of a reversal. There's multiple kinds, multiple types, and there's multiple ways to tell because it's all a pattern. Reversal requires yin and yang. It requires something to occur and then something else occurs right after that, right? It's like cause and effect. That's all this is. So the cause of you dropping here was who knows and who cares. What was the effect? You ran up to that halfway point from up here to down here. That was the effect. And then you slammed down, ran right back up to the top. You did an equal reaction from here to here. Look at this. This reaction is very similar to this right here. As you can see, it's like in the 75% territory. It's over half of it. So it's very close to the top. But is it the same? It is not, right? It is not the same, which basically means me looking at this here and me looking at this here, just off of this weekly recipe from this high and this low, and then me using the 4 days, 5 days of action, price action that occurs, I'm able to see that this market is actually more bearish than it is bullish. Point blank, everybody. That's the whole concept of what I'm trying to teach you right now. You can actually tell the direction of a market with just weekly price action every single time. That's why I always know where the market's going, because all I gotta do is just measure the top and the low. Is it above the mid? Is it doing equal reactions? Track it down. Keep tracking it down. Look at the 200 moving average. Look at the EMAs. Look at the VWAP. Look at the VRVP indicator. Look at supply and demand zones. Look at reversal points. Look at DARP. There's so many things for you to look at. And when you put that all together, because I'm just showing you one way of being able to understand if a market's bullish or bearish. There's multiple ways for multiple different directions. And again, just by looking at this, if it snaps down to the middle and then we open up over here the next day, in my head, I'm thinking, oh no, you might go down lower. Because look at this reaction here. Look at what occurred right after. You slam down to the bottom, and as soon as it gave you a bunch of opportunities, as soon as I see this here, of course I want to think in my head, yes, the market's going to, run up to the top. That's why at that point I would be like, all right, everybody, lock in a weekly call a month out for this price to that price, right? Because it's not that far. It's only about $10. So I would probably be like, lock in a contract that's this strike price right here. And by the time it hits this area, we're out. By the time it hits this point right here, we're probably going to be gone. We're probably going to have enough capital so that we're happy, And then anything extra is just for the runners. That's it. You just hold one runner. As long as you're gaining profit, if that runner goes to zero, you're still making money. As long as that's the case, you're not going to make as much, but you're still going to make money. So usually when I tell everybody here to buy an option, it's this option right here that's right before the high, but right next to the midpoint. Because I know that's an area where the market's probably going to magnitude. You understand? Simple as that. Vice versa, as soon as we yank out this box, because of course we would be able to tell this is the range. It's pretty obvious. We would have been able to measure it, tell, and we would have been like, all right, if it pops below this blue box, we're just going to buy puts for it to hit this floor. Potentially going as low as King's Point, which would be right down here. Which is kind of where the market ends up slamming down to right away. One shot, which is so funny. That's kind of funny now, isn't it? It literally hits King's Point. This is another way that I teach you guys how to look at the market. This is a pattern that oftentimes dictates if a market's still holding or if it's becoming more bearish. The second I see it go below that King's Point area, I'm getting more puts. So the second I see the market open up here and it's at King's Point, I'm probably going to buy a call right here. And we probably would have made money right there, as you can see that day. If we kept holding it, as you can tell, we would have lost it all probably. But the next day I probably would have told everybody, all right, let's see if it's going to run into King's Point now. Double point of confirmation and then more downside. And that's exactly what occurs. But this is normally how I have you guys trade the market. It's like copy and paste, literally. So we would have known to play more puts here. The only problem is, truthfully, puts are harder than calls. Puts are way harder than calls. So with puts, I usually cause people to sell out a little bit earlier. Because usually a market is always more bullish than it is bearish. Which means if a market's really bullish like how it is right now, it's kind of easy to time the puts. But it's also kind of hard. As long as you're buying next to that top point, which we've been buying at 605 to 613. We even had some people lock in contracts at 590. I remember it fell a really good amount at 590. So when it fell in the 590s, I told everybody, claim some profit on the puts just in case this holds and it's a little bit more bullish than it is bearish. You might just yank right back up into the high and run into 618. So this is something we talked about for like a month, 2 months, If I show you the current price action, just to give you an idea, let's go over here. So when I told everybody to buy, these are all the levels that I've been telling everybody to buy so far. Just so everybody can understand, because I know you guys just been hearing me talk about puts nonstop. So the first level I told everybody to buy was when the market hits 596. So we had everybody buy the puts here. I think it was a Wednesday it fell. Yeah, see, Wednesday it collapsed, but Monday we started buying it. The next time I told everybody to buy puts was the same area. However, I said be careful. It's probably not going to drop down as much as it did last time. It might compress here. And it was so funny because it literally did compress. The only thing that sucked is when you ran here, it was pre-market. So we never got a taste of the price action here. When I saw that, I told everybody, I was like, all right, they're probably going to make the market run up as high as here so that those people who see the market here, they're probably just going to sell, because that's how normal humans, that's like normal human psychology. When the market's back at a certain level that it could have been before, where you would have been happy before, the market tends to slow down or enter some type of selling, some type of retracement. The funniest thing is when it falls down, you see how it falls and it's kind of holding on all this volume down here. That's how you could tell again that this is, again, more bullish. As well as, of course, the trading style you see on my screen. It's kind of funny, but we had this be one of the points we were going to buy calls. The way you know if you should buy calls or puts on my screen is look at my paths. If my path is pointing up, it's calls. If it starts pointing down a little bit, that means in that area, you can have a put. So now with you guys looking at that, when I make new lines and new paths, you're going to be able to tell that I'm giving you maybe 1,000 to 2,000 entries throughout all my different charts, because they all have different entry points, different peaks, different troughs. It's all purposeful. And again, this is what allows me to start noticing all these patterns, is because I'm attacking this like a computer does. Various different methods, various different ways, various different perspectives, horizontally, diagonally. And remember, there's 180 degrees in a circle. So there's 180 different types of trajectories a market can follow, up or down. Obviously, it doesn't go left. So that's why I'm saying only 180 out of the whole entire 360. Only 180, because you can only go up or to the right, in theory. And usually it doesn't really go up, you know, perfectly, but it's speed that I'm referring to. So speed is oftentimes dictated by an angle. With the angle of what the market is currently in right now, it's basically, there's an easy way of finding out what's the right diagonal area to use out of the 180. But it's still pretty hard. It's still pretty difficult. But again, the idea is out of 180 degrees, there's 180, out of 360 degrees, there's 180 different paths. And as long as we can track down that path, we can see the speed of market it has, you know, going into the bigger picture. That's it. Simple as that. So now that you know that, let me zoom out here and look at how weird this is. I've had all these points for a while now. Next location will sell from. Next location will sell from. Next location will sell from. The only one that was wrong so far was this one here. This one was the only one that was wrong so far. Next location we'll buy from. We literally gapped up there. So that was good. That was correct. How about this one? Next location we'll buy from. That was good. This is the midpoint. There was no real price action when you actually got above it here. So when the market falls, you're definitely going to fall down to this point here. That's why I have it highlighted. But then if you look at these points, next location we'll buy from. You ended up running up, falling down perfectly on it, where we could buy. We kept buying this whole entire area here. So yeah, we just kept buying it all up nonstop. And yeah, that was pretty much it. It's pretty cool that we only got one wrong, which is kind of funny because when the market fell out the sky, the only trade that we had that really went against us was this one. We bought calls right here at the bottom. And then we also bought calls right here. We were up 300%, but we didn't. I told everybody to hold them. So that was pretty much the only loss. We bought the 5 days over here. We waited, kept getting into random 0 days, random 1 day contracts. We played calls here. We had a nice run up here. But since you didn't hit the midpoint, like you see how from up here to down here, you didn't hit the midpoint here. This told me you were more bearish. The only thing is, in the moment, in the time, truly, I didn't use DARP as much, right? I was using my other trading styles because it was a little bit easier for everybody else to have on their screen. They could copy and paste it a little bit quicker than DARP. I didn't really realize the functionality of it. Like let's say if it's below the midpoint, like boom, it's bearish. Simple. Don't overthink it. It's below the mid, it's bearish. It's above the mid, clap your hands everybody, it's bullish. Simple as that. It's just I kept putting too much thought to it because, again, I hadn't used it as much. I didn't have enough experience with it to really give confidence or give a confident answer. And we kind of got screwed here because we bought calls right here again because we were thinking this was like the entry of a lifetime. We were up instantly like 100, 200, 300%. And then I told everybody to hold it. I know some of you claim profit. But then the market fell out the sky. And then as soon as it hit 480, because it hit 480, and I've been talking about 480 with all these other charts here, as you can see, like this chart right here specifically, 480 was perfectly in between those golden circles right there. These golden circles basically mean this is a magnet point that the market's going to run, like basically magnet to. It's going to want to touch. And as you can see, 488 and 479 are the main levels you wanted the market to touch. And it stopped right here at 478 or 481.80. So right in between them, a little bit more dramatic, I guess. So basically what I'm trying to tell you is, even if it fell down to 470, I still would have bought. Even if it fell down to 488, doesn't matter, I still would have bought. That's what makes this so special, is because when the market's wicking around, look at how it runs from 480. Let me see if I can move this box for a second. Actually, let's not move it. You can obviously see with your eyes. So it hits a lower point first, and then when it runs up, look at how viciously it runs up here. That's $40 right there. One in 1 day. And then when it comes back down, you see how it also stops in that same range within this the blue box. That's what makes this so special, is that you would have been correct and you would have knew this was going to happen because you would have had this on your screen. So now that I'm looking at this right here, this is the reason why I told everybody to buy. We all bought. We were all massively up. You then ran to the midpoint. So boom, now it's bullish because now you're above the midpoint. However, when you ran up above the quarter point here and you hit the midpoint, you fell down after hitting the midpoint and you hit the quarter point, correct, everybody? You hit that yellow line right there. All right, let me ask you something. When you ran above this midpoint, did you touch the midpoint again? You did not. So you did something improper. You did something you were not supposed to do. Okay, so that's the first kind of hint that we had that something is occurring that's not supposed to occur here. This is not normal no more. This is a weird market now. Now this is too aggressive, too bullish. But we knew it can happen simply because you were above the midpoint. So then we went back to the other midpoint we had, the first midpoint. And where does the market start consolidating? The first time it runs up very viciously, right around that midpoint. That red dotted line right there. And again, that's half the area of up here and down here. So it's a very simple thing to do. You could do it with your eyes closed, in fact. You know what's the funniest part? Is this way of looking at the market is so easy that even when you're walking outside, you could be like, wait a second, what's Tesla's price? 480? What's the low again? 220. You do the math in your head. You're like, wait a second. No wonder it's been stuck at 330. No wonder it's been stuck at 340. So that's honestly going to be the one thing that starts occurring here. And that's why I feel like you can take this level, the steps and the levels to the next level. Just because you can do it easy in your head. Very quick math. Like you could do 2 plus 2. It's not like you're doing a damn science equation, right? Which usually that's how it actually is. People look at this thing like it's like rocket science, but it's really not. If you could just make it simple for yourself, which is why it took me so long to create all these YouTube videos. Like, I had to put so much time into actually delicately handcrafting something that people of all walks of life would understand, because I want people's kids to understand. I want their grandparents to understand. Everybody has to understand this because it's simple. So as long as we're working with simple stuff, easy patterns, you guys can understand what I've created here. And you can see it works. It always works. So now, next up, how can we now predict what's going to happen next? Very simple, everybody. The next thing we're going to do here is we're waiting for 615. So the market's just stuck right now. I want to see this fill half the gap. And then once you fall down here, we're going to buy some calls for you to run up basically back to the top. The reason why we're doing this is because every time a market fills a gap, it usually fills the halfway point of it and then runs up to the high, if not a point that's a little bit higher. Take, for example, this right here. Look at on Friday. When the market fell down on SPY, you opened up right here. So you have a large gap right here from here to here. When the market fell down, if you measured the gap, which is, there's two different ways of looking at a gap. There's a gap where it's just literally, there's no candlesticks there. It's just empty. And then how I look at gaps, which is, where does the market open up at? And where did the market close at yesterday? So usually this is like my favorite type of way of looking at gaps. It's a little different than the way people normally look at it, but it tends to help me just be able to predict stuff a little bit easier. And as you can all see, it basically hits right next to this midpoint, runs straight up to the top, you go way higher, and then you come right back down to fill the gap. So it's probably going to do the same thing here. It might start doing something a little bit different, though, because what if the market became more bearish over the weekend? And that's why they sent up the market. They basically sent up the market so that they can get an easier entry that's cheaper for their puts. So, yeah, you never know. The market might just slam out the sky right here. That did not look good when it opened up, though. That looked like that thing was going to elevator right back down through the planet out the other side. That's what it looked like for a second. But it's holding itself right now, so that looks really good. What that means is very simple. If we hold above 618, just like last year, we're going to play calls to 625. Simple as that. So again, everybody, if you get above 618, you simply are going to play calls to 624, 625. You could do it 5 days, 6 days. If you're going to do 0 days, just watch out. You might not run all the way up there. It might only be like $1 or $2 every day. Who knows? You might do it tomorrow. You might do it in 2 days. So it's a much safer entry if you could just buy a 5-day here. But again, if you don't have the capital for it, what are you going to do? You're going to trade 0 days. Are you going to randomly buy it? No. You're going to wait for reversal point number 4 or reversal point number 5. That's what's going to mitigate the stupid, plays in between. Because you could test yourself. I want you to test yourself. And usually the only way a person could test themselves is if they put themselves into the unknown. Correct, everybody? You can't test yourself because how do you know what you're made of if you're not being placed into an environment where you haven't dealt with that before? Because now you can get a full depiction upon where your knowledge lies in terms of what you know and what you don't know. If you keep doing the same thing every time, you always become smarter with it. Therefore, if you do something twice, you're always going to become a different person. Therefore, that's not really testing yourself. You kind of have, a better head start. So, but it's kind of ridiculous because you're never going to get that first ability to test yourself accurately if you don't take stuff for real. You know what I mean? You're always going to mess up that first test That's why every single time you guys trade after, or not you, I'm not talking about every single person here, but it's at least happened to everybody at one point. It's not occurring now from what I see across the board, only with some of you maybe. But if you're doing the same thing in terms of the way you approach something, when you do it the first time, you end up having a very bad depiction upon the future. So that means if you try to trade and you messed up a bunch of times because you were just using surface level thoughts, you weren't really going deep with it, every single time you trade, you're going to be scared. Every single time you trade, you're going to be worried. But it's kind of weird to me because there's only certain trades that should get you scared. Truly. Only certain trades, because those trades are the unknown trades. They're what we haven't tested yet. For the most part, we pretty much tested everything that needs to be tested. 5 days, 10 days, 13 days, 14 days. So, like I stated before, the one thing that I oftentimes see is what a person has learned and used in terms of knowledge is oftentimes not even a good depiction of what the hell is even going on here. So like a person basically, they can't gauge the success of a trade. There's S plus trades, there's B plus trades, there's an A trade, there's like an F minus trade. You know, that's like a terrible trade right there. There's like a D trade. You get what I'm trying to say here. There's different assortments and ranges of trades. You know, you have the A plus 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 trade, which is like the best trade in the world. It's the most consistent. It's the most repetitive. Whether the market's bullish, bearish, it's going sideways, it's going up, it's going down, doesn't really matter. It works in multiple different fashions. It's a high win rate. It even works for Forex or futures, or it works after hours. That's how you could start to test your trading styles. And what I started noticing was all the trading styles that we have, we get them so advanced to a point where we could literally use them for trading other markets, crypto, Forex, futures, which means the pool of data that we were going through from, let's just say, the beginning of last year till now was just options. The pool of data that I can now pull from to test stuff, it now lies in options, crypto, Forex, futures. It lies in all those markets, which basically means my experience as a trader the last 4 to 6 months has grown so much because I now have 4 or 5 other things I can test with, that the consistency aspect of things is so out of this world that I can't even explain it to you with words, because it just sounds like a bunch of hoopla, you know? But when you really think of it, the way we went about it, trading crypto, and we weren't making a lot of money. We were testing all the time. Test, which oftentimes means big loss, big loss, big loss, big loss, big loss. Which, you know, some people, again, they can't understand that that's actually what was able to put us at that next level, which is why this morning when I first joined in, I told you guys, most of you here are already millionaires. Like, you're already a millionaire. You've already learned from whatever I had to offer. It's just your turn to plan how you're going to go from 1,000 to 3K, 3K to 50K, 50K to 100K. Because it doesn't take that long. I told you. Like, if you're just getting 15% per day, and it's, let's just say it's a A++ setup, right? Meaning you always wait for reversal point number 5. When you hit number 5 on the reversal points, let's just say if you always wait for that, and you always get into a quick little scalp trade, even if you're using your whole entire account, those trades rarely happen. Like, look at yesterday. Did you hit number 5? Look at how wild yesterday was. You moved, I think, like $6, but you still stayed within the ranges. You didn't hit number 5. So it doesn't always happen, but when it does happen, let's just go find a day where you kind of shoot through number 4. Look, none of these days you hit number 5. So that's the reason why I tell you guys, like, you know, like the S plus setups, they don't happen a lot. And it's kind of bittersweet, especially when I'm teaching people, because, you know, they always want the next gain the next day. So like, look right here, for example. You have a 5 reversal point 5 trade here, and then you fall down to the blue line. So this is about a 20% trade as long as you bought directly on number 5. And if you look at the chart right after, you just fell. So you would have been up instantly, and you would have been able to basically sell out even if you full ported your whole entire account here, and it would have worked out. If we go to the next one, number 4 works, but it's just like sometimes you take so long to do the first move that everybody's already out there playing because of where the market's, you know, at currently on the trends. And yeah, so 4 is a little bit harder, but you got to be patient with it. When 4 worked out here, just went back to the other 4, then went back to number 5. And then at that point, honestly, if I'm you, I'm not really going to play this market, even if I have a bigger account. You see how it falls to number 5 here? This is where I would have played with a bigger account right here. Because you fell to number 5. You see how you go right through number 4? That means the whole entire Discord that enter into number 4, they're going to be down that day. And you're going to be sitting here because you waited for number 5. And you're going to be able to buy into that trade. But you know what's kind of funny is when you hit number 5, it oftentimes means that week either you were hitting number 5, which you weren't here, or you're going to start hitting number 5 more. Theoretically, that's what that means. Which is kind of funny because let me see here. You hit number 5 here, instantly reflects and goes right back down to number 3. So when it hits number 5, it looks like the market likes to go down to number 3 and number 2 before it hits number 1. So we could fix that in the rules here, and I could make it better just like that. We just found out a way to improve my charts just like that. And that's the crazy part is I'm not going to do it right now because I'll remember to do it later. I'm going to write down a little note here for myself. But I just wanted to show you guys, like, even when you take some of my charts, it's easy to improve my stuff. And as long as you improve it, I have no problem with saying you were the person who improved it. I think you all know that. I'll give you a nice title. I'll give you a nice statue. Place you in the Hall of Fame of Peacock Consultation. And then boom. We'll go on with the next hurdle. So, yeah, just try to improve them whenever you can. Try to collect as much data because really all you need to do is just copy and paste it to the opening price. And then you could literally look at it the past 1,000 days. So you have a lot of data that you could just pull from. And then you could take this to the Forex markets, crypto, futures. And you can really start to kind of aggressively, you know, learn. That's why I call this the most aggressive fashion of learning. Because you're aggressively learning throughout so many different sources that it forces success. It literally forces it. New supply and demand zone on SPY. Let's go check it, fish. Nice call out right there. Let's go see. We're on the 15 minute. How much candles do we have? 1 red. Is it touching the last one? It is not touching the last one. So we just got to wait for another 50 seconds here. That's going to be candle number 2. So as long as we wait for the 3rd candle and the 3rd candle is green, then we can turn this into a supply and demand zone. To me, this looks like you might actually turn red here. You could actually turn, because if you have green here, you could turn red. Yeah, you might just turn red here and then just have another 3 red just going straight down to fill half of the gap. Maybe around like right there. You might have 1. And then like another candle right here that's red. Exactly, fish. Oh, that was from yesterday though. So yesterday we made 2 of them, which was basically Friday is what I'm referring to. We had 1 supply and demand zone right there, as you can see with that green candle. And then you have 1 right before it over here. And then this doesn't count, of course, because you're touching a previous zone. This doesn't count because you're touching a new zone. If you hold on top of this, though, you know what this means, right, everybody? If you hold on top of 616, and let's just say we bounce up to the high, honestly, I mean, we have to wait, right? Let's just wait and see. We have to wait for probably by the end of today, but honestly, we might be able to turn this into a gold zone here. This might turn into a gold zone, because that's all I'm hunting down right now is the next gold zones and the next purple. And then in the middle of me hunting down those colors, I am putting basically the other zones on the screen, which is the orange ones, which are less important. The market does react off of them, so they're kind of important, but they're not as important as the yellow and the purple. For everybody who doesn't understand that, but I think every single person here understands that, though. Monster Sherman will. I think we went over that with everybody, honestly. Donald, we might have to go over it, but I think I'm almost 1,000% sure you already know it. I could be wrong though, but I'm pretty sure you still use supply and demand zones still till now. John, I already know you know it. Meech, I already know you know it. I'm pretty sure you have them as well. Beast, I know you have them. Culinary, come on now. Danny, I already know you do as well. And then AC. AC, just let me know how the supply and demand zones are doing. If you need me to fix them for you, just let me know. I'll show you. I'll fix up a new video for you, and I'll show you how I did it, so that you could just easily replicate it to your charts, and then we'll go from there. But yeah, just let me know, AC. In the PM, Frost. Let's see. Frost responded. Alrighty. Can you stop biting that? Oh, you have food? You have food. These damn animals. You got it, Frost. I'm gonna look through your DM just to see which videos you were talking about, and then I got you. Anybody else? Anybody else need any other videos or? You still feeling the quarter point? All right, let's look at some of these SPY options now, because SPY is giving us some time here to react to it. Must be for a reason. Let's see what that reason is. Okay, so first thing we're going to do here is we're still waiting for reversal point number 3 and 4 before we start getting into some of these entries here. 3, I'm thinking we hop into something a little bit cheaper. We could hop instantly into like a $10 option, and then if it goes through it, we just buy a $30 option at number 4. We could do that just in case it holds at the halfway point. If it runs up to the high, and you have, let's just say you buy an option that's worth, let's run the numbers here. So I would think that if you buy a 620 when you hit 615 and you run up to 618, the 620s, they're going to be about $60. The only problem is data. Data is the only problem right now. So what we could do is Wait for reversal point number 4, which is basically for 75% of the gap. That might be the reason as to why the gap is actually going to hit the 75% point today, because of number 4 being right there. Could be the reason why, right? We're going to run through a few charts just to kind of track it down more, because we're always learning, of course. We're always learning, trying to get better, and maybe there's a better way to look at this than we currently are looking at. So we're going to try to see if we can find it right now. Because why? Because it's a gap. Show me how to group and move. Look at trading view. Perfect. Thank you, Meech. I got you. Perfect. So I'm going to help you guys with those videos, and then boom. That was the reason why I privated them, by the way. I wanted to see who was actually going to need it and watch it. Because if you need it, you're going to remember, and you're going to always ask for it. Until I give it to you. Because you know that that's the next thing you need. And then in the meantime, whenever we have our one-on-ones, I'll just subconsciously teach you without you noticing. Because all those videos that I've pretty much showed and shared throughout the last year, we have already went over everything with one-on-ones. The only problem now is we have to see what information people are lacking and like what areas, which is a little bit harder to track. It's possible, but the only way I can actually track it down is if you guys are consistently telling me what you need. And it's not just always there for anybody to use, because, you know what I mean? They're all very valuable videos. I don't want nobody to think that they're not. So yeah, that was the reason why I privated all my videos on my channel, by the way. Because they're very valuable. And yeah, I just want you guys to take advantage of it, of course. But I want you to know that they're valuable. I just want you guys to watch it. So, yeah. This is never going to be on YouTube, by the way. None of those videos. I had to hide some of them, I'm pretty sure. I think like the one from yesterday, we're going to have to hide that one and turn it off. We're just going to leave that one for the Discord, of course. That's part of the classes section. When I'm doing videos like that, I have no problem with having those videos just be there for anybody to watch, because it's kind of like 2 hours long, 3 hours long. So it's kind of like a little podcast section almost. It's just a long video. For the other videos that are like I'm saying, they're very valuable. They're only 5 minutes long, 4 minutes long for the most part. DARP version 3, which is the new DARP. That was one of the reasons why I also hid all the DARP videos, because I upgraded it again. We now have DARP version 3. So I'm going to make the video on that probably in the afternoon today. And then once we make DARP version 3, those videos are now going to be always on the Discord, always turned on. You got that, everybody? DARP version 2 is very difficult. I'm telling you, that thing be having me stressed out. And if it has me stressed out, it's definitely going to have newer individuals that are charting. They're going to do that one time, and they're going to be like, nah, I can't do this. I'm good. So I don't want that to be the case. I want their first, what is it called? Their first, whatever, interpretation of it, the first time they're seeing it, their first perception of it. I want it to be something that they know it's just going to be tedious. It's easy to understand. There's a path for them to follow, but it's just tedious. That's it. That's the only thing that sucks. But I mean, that's the reason why I tell you guys hop on the Discord at night, and then we could just do these charts together. So that's what we're going to start doing here every single night, by the way. Every single night until we're all millionaires. And we can buy houses, we can help our families, we can do everything we always wanted to do. Until every single one of you are a millionaire. You're going to be required. Of course, if you're free. If you have family and stuff like that, I'm not going to require you to be here. But if you don't have family and you have a free schedule, because you could be honest with yourself, just pop up here at night. We'll fix up the charts together. We'll put on a movie or something so that we could watch something or listen to something in the background, maybe like a little podcast or something. Maybe we could talk about something else. Maybe we could start recording a podcast, right? And yeah, we could just fix up all the charts at night. So you're not alone doing them. That also helps me, by the way. Doesn't make it boring. We're still waiting for number 3 and number 4, by the way. The 620 options, they got really cheap right now. So this is not a bad idea now. Now I'm liking this. I'm liking this, everybody. I think this is going to be a good idea here. So we buy a 620 option at reversal point number 3. This is a 0-day. And then when you hit number 4, we're just going to instantly hop into a option for 618, which might be around $40 at that point. So we already have our next options that we're going to hop into. We're then going to wait for this to react and then bounce all the way to the high. And then once you get to 617, 618, after you hit number 4 or number 3, we're then going to sell out and then start buying a cheap put for you to fill the whole gap today, just in case if it gets aggressive again. Everybody got that? So in case it gets aggressive again, we are going to buy the calls right there at the bottom. We're going to sell out at the top. We're then going to buy more puts at the top for a cheaper amount, just in case it doesn't want to fall today and it falls tomorrow. And then we'll just keep it rolling. Keep the film rolling, everybody. So, let's see here. By the way, when you hop into a leap play, make sure you post it on the LEAPS section of the Discord, ladies and gentlemen. Looks like we just got gentlemen's here. So whenever you guys get a chance, just go ahead and post that, just so everybody can see what plays everybody's getting into. Maybe if Danny gets into a play, he might be able to get into a better play than I did. And then maybe if Culinary gets into the play right after that, he might get into a better play. And then if you guys get off of Culinary and Danny's plays while they're getting off of mine, it just makes it more secure and more stable and more, you know what I mean? It just makes it more logical. There's not going to be as many plays where we're all getting into, because our logics are not crossing paths with each other, which is perfect. That's what I want. You understand? At a certain point, we're going to be able to just use the logics that we built, cross paths with each other, and instantly that byproduct of us combining everything creates the path forward. It's kind of cool because everybody's involved. No matter how much of a beginner you are, no matter how much of a pro you are, everybody's involved in this little group aspect, and oh yeah, it makes it really fun. By the way, I'm going to be putting up the website soon, and there's going to be a leaderboards. So what I'm going to have you do is every single day, I'm going to require you to go on the website whenever you get a chance, and you're basically just going to put your notes for that day, the success, your profit, what accounts you worked on. Was it $1 million account? Was it a smaller account? Was it an account for you to fix your personal, situation, if you're trying to get out your job or if you're trying to build something for yourself, right? Whatever it is, doesn't really matter. I'll find it real simple. I'll make it so that you don't have to write too much. I'm not trying to have you write paragraphs here. What I want is you to be able to go through my checklist every day. And as long as you go through that checklist, it secures your growth and establishes a way for you to be able to consistently profitable, because you're going to consistently be knowledgeable with your past mistakes. You'll consistently see how you can improve stuff, make it better. You'll consistently see how just by you taking a few, different notes, a few different ways, it secures your growth every single day. So you don't got to be worried that I not do enough. In fact, you just doing that is enough. If you want to get even better, as long as you know how to do that and where to do that, yeah. By the way, it highlights itself. Like, let's just say if you're bad with trading in the first hour, well, it's simple, I started noticing that there's a pattern with me not being able to trade the first hour. And then what we could do is we could start creating trading styles and going through my trading styles, which actually help with that. Because I made trading styles to help with everything. I even made trading styles to trade futures after hours. I made trading styles for Forex, for crypto. There's a bunch of different trading styles. But yeah, and then we can start making new ones. Don't step on the screen. What is your problem with stepping on the screen every time? You know you mess it up when you do that, right? Huh? She's so fluffy. You gotta get yourself a little companion if you're in the house, by the way. I was thinking about getting a bird, but I don't think that's a good idea. At least not right now. This video was really good though. So far, everything we covered and everything we talked about was... It kind of enables us to kind of just see stuff differently, you know? To kind of really understand what was all the planning for and what was all the videos for. I would say that's one of my things that I have a hard time with. Like, it's really hard for me to accurately be able to... Is that ant? There better not be mad ants here. Where are all these ants? Is that an ant or am I bugging? I don't keep no food in my room. I'm so confused. I've been at war with ants for like the past month. Last year it was the flies. This year is like there's ants everywhere. I think it's because they've been spraying the houses nearby. All the colonies been moving over here. It could also be the cat. I was thinking about that. For some reason they're like attracted to the cat food. Anyways, we'll sort that out later. So yeah, we covered everything we needed to cover in terms of just a different understanding of what was everything for, I would say. And again, that's very important because if you don't know what the purpose is of certain aspects of what I teach and what I'm doing here, if you don't know what it's for and why am I saying this or why am I doing this, it kind of makes it all pointless, you know? You do gain knowledge, of course. You do gain something. But it's just like you gotta understand everything. Why do you have to trade with the 200 moving average indicator? Don't I tell you guys to never trade with indicators? I always tell you guys how indicators, they're not the best things in the world. The only thing that makes an indicator good is the functionality of it. How do you trade with it? Some indicators, it's very easy to trade with. Other indicators, there's no real... Like, think about it. You go on a YouTube video right now, and the guy, he's going to be like, if it touches the 200 moving average, this is literally what he's going to say. Because it's just logical. So you don't really even need to watch YouTube videos whenever you look at stuff. It's more so uncovering where's the entries that lie in them. That are consistent, too. They have to be consistent entries. So, like, when you hit the 200 moving average, look at yesterday. Did you hold on it? Or did you go right through it? And you kind of went right through it, right? However, before you went right through it the first time, if you look at it, the wick ended up touching it. Why are you biting the desk like that? What is wrong with you? Just chill out. If you look at the 200 here, when it first hits it, it bounces on it the first time, and then most people, they're going to be like, all right, the second time it bounces on top, that's a double point of confirmation for the upside. So that's when I'm going to buy my call. And look what happens when the market basically touches that area again. It just, you would have been down. Even if you average down over here, because it's towards the end of the day, You would have been at war fighting with this contract here until you started going up a little bit. So what I try to create is a system where you need to understand that the first time a market does something, it's very important. So for instance, the first time it hits the 200 here, after it didn't hit it for the past, what was it, day or two? Let me see. Yeah, so after it didn't hit it for one day, this is now the second day it wasn't hitting it. You were traveling way against it. You then go straight down to hit it. And then you collapse right back below it. So do you guys see how that would have, and you would have entered into that trade there, right? And depending on if you know to hold for just a quick little second, you would have gotten your profit and walked away no matter what the market did. So that's why I teach you guys how to get into the trades. The first time something occurs, I always usually teach you, all right, now you should get into the calls. The only problem is since we got that reaction yesterday on Friday, you might not get the same reaction on the 200 moving average. So what I would do here is I would look at all the times where it has hit the 200 moving average in the last month. And then I would be like, all right, last time it hit the 200 here, when it fell down on top, if you would have got a call here, it didn't bounce up nowhere. It only went up like 5%, 2%. That's how much you would have made. So at that point, you could have been like, all right, I should have probably waited for it to get beneath the 200 and then it to react to it a little bit better. But again, that wastes so much time that now you're playing in the passenger seat again. You got to be in the driver's seat driving while the traffic gets crazy, you know? You have to be able to control everything. So if you keep looking at the 200 moving average, what you're going to oftentimes start to spot is it really does do the same thing every time. Not every time per se, but pretty much almost every single time. Let me look at the 200 over here. When you hit the 200, basically, where is it? Oh, you're right here. So you hit it in the morning. When you fall below it, you get right back below it. When you get above it, you start shooting up into the sky. When you fall down on top of it, you do not hold. So you buying on top of the 200 moving average, therefore, is not really a good idea because with me just showing you what the 200 did the past couple days, it's always going below it. Or one time you had an opportunity where it didn't go below it. In fact, it held on top of it just for like a 5, 10, 20% trade. So if we're looking back at today, let's go ahead and look at it. Currently, we're about to hit the 200 moving average. So because it's a point, which is the halfway point of the whole entire gap, you might have a potential opportunity for it to hold. There wasn't enough charts that we looked at for me to confidently tell you that. However, I know this is an opportunity that oftentimes does work. It's just it doesn't always work. So the first thing I want to do here is, again, I'm looking at the 619s because their price is now $24. So I'm thinking what we could do here is when you hit number 3 on the reversal points, because right now you're still at number 2, meaning we have to wait for it to go down a little bit more. But once you hit the number 3, we could hop instantly into a 619 call that's 0 days. It's right next to the top. It's pretty close to 618. So now we don't have to buy a 618. Which therefore means if I'm going to hop into another option, it's only going to be a 616 or a 615. You got that, everybody? This is the logic that goes behind it. If I was trying to buy a 620 and the prices, they went down to a really good level, really cheap, and then the option below it is actually at a better price by the time it does what I thought it was going to do, that therefore means that is the momentum. So that's how you start tracking it down, because now you just spotted it. You can see how it's supposed to be at that price by that time, because a couple seconds ago, 618s, they were $80, right? And do you see how they're perfectly at $40 right now? That means that by the time we drop to number 4, these 618s might be worth only $20. And that's a crazy cheap price. So if you're one of those people who are trying to wait for the A plus setups at number 4, I'm just letting you know, you might be able to buy a 618 for like $30 or $20. And it was just $90. And then we could sell out the second it hits like 60. As long as there's a nice reversal and doesn't slow down. If it starts to slow down, just know we got to jump ship. And we got to find the new treasure chest, which is going to be that next better option. You don't want to go further. You always want to go closer, but you want to stay within a certain range. Because, like, let's say if I just told you we're going to buy a 616, do you really think I'm going to make you guys spend $100 on that thing right now? It's $121 for a 616. Honestly, no. I would wait for that option to drop to like 50, 40, which would happen maybe around 2 o'clock. So what does that tell you? Now I know that I need to wait to 2 o'clock. Because from the beginning of the day till now, it's at a certain price for a certain move. Which therefore means if we need to do the same amount of move that we just did from open to now, it took it about an hour and 10 minutes. So that means for this to hit number 4, it could happen in about 1 hour and 10 minutes. So maybe at like 11:50, like 11:50, we might touch the 200 moving average and then yank really. And actually, no, 200 is going to be before because it's closer. It's not that far. Number 4 is going to be in an hour. So that's how you can start tracking down time now. So again, we're using what the market is giving us, which is the move and the range since opening, as well as with the time that's associated with that. And we can now start to predict, all right, by this time it should be at this area, which therefore means my option, which is, let's just say a 618, still has enough potential to make some good money here. But if the market slows down, it's going to start taking from that. So that's where you start understanding how to yank yourself out, jump ship, and then look for another better option, which might happen in like 20 minutes, which, like, let's just say if you're scared and you get into a call and you're like, man, I should have waited. As soon as you say I should have waited, go ahead and sell it. Don't be like, wait, maybe now I should hold it. Because now you're playing cat and mouse with your own personal gut. And that's the reason why your gut is not always going to be on your side. You got to train your gut so that every single time your body is like, all right, this is weird. I got to get out of here. It's most likely because you're correct. That's all it is. You're just understanding how to be correct spontaneously, instantaneously, within the flip of a second. You don't got to triangulate any nonsense in your head or, quick news and all that other yada yada. You'll always be able to see a news report and be like, I know what that instantly means to the market. But yes, going back to the options, the most important thing right now is to understand the momentum and the flow. Because if I get into a 618 option that's at $41 right now, I know that if this thing does not go up, in fact, if we drop down to number 4, my option is going to go down to $20, right? And then if we run up again, my option might only run up to $30. It might not go back to 40 no more. So what I would do is, if I buy something that's currently at 40, and I know we're just chilling here for a while, I'm going to stare at the options price. I'm going to be like, all right, if it falls to 20, that's when I'm going to buy one. But let's say if the 617, which currently costs $70, is at like $26, $25, I honestly will buy that one more instead. I'll buy the 617 because there's no point for me to go one more option out and it be cheaper, which is, yes, it's going to work in my favor. I agree with you, but now it's kind of like you're playing with the momentum. You're playing with fire. And if you don't know how to gauge that fire, you will get burned. So, yeah. That's why as a day progresses, it becomes easier to trade. Because now your brain is basically inherently building this map that's perfectly able to actually help you profit. It's telling you, all right, now the market did this right there by that time. So if it's going to yank and do something crazy, it's probably going to be at that time right there. And yeah, I'm telling you, you got to take this like you're a robot, trying to always adapt and get better every single day, because the market adapts and it gets really quick. There was some days where I was in like full like note-taking mode, where I was just taking notes of everything. And you know what I noticed? The market still improves so quickly upon itself. Like, let's say if you have a certain type of idea about how last week was going to play out, right? The next week after that, it's going to change so much that it's like you have to put more work into, studying this market right now, truthfully. If you're not fixing your charts up every single weekend, you're going to have a tough week, honestly, because you're not going to understand how things line up and how they link up and how they're changing. Every time you kind of pop up here, it's going to kind of be like literally like a last man for themselves type of thing. You know what I mean? So we got to just avoid that stuff here. As long as everybody had basically planned the night before, yeah, you'll be good. You'll be A-okay. By the way, you can also plan the options prices the night before. So let's say if I'm looking at a 1 day, because I know tomorrow I'm working and I can't look at the market, or it's like a 4th of July something, so you're still working while everybody's, enjoying themselves. I don't even know, is 4th of July on the weekend? When is 4th of July? Oh, it's on the Friday. That's a pretty nice day for a Friday. So yeah, if you're trying to work on buying into options because you're busy the next day, the way I would do it is I would look at today's 0 days, and then I would look at tomorrow's 1 days, look at the implied volatility, and then look at the theta. Just write down the options, write down the theta, write down the value, as if you're taking like a screenshot of it. And then what you're going to do is you're just going to test paper trades. Get into that with a paper trade, test it, see how much money the next day you lose, see how much money the next day you make. And then you also factor in, did the market go your way? Was your idea correct about the market? Did your option go your way, but your idea didn't go your way? Sometimes that happens. That's a happy ending right there. Like, you got to be honest with yourself. If you're not honest, that's why a lot of people, they don't really get better, A lot of people are not really honest with themselves. And it's not a bad thing. It's just more of something you have to develop upon your own character, I guess, right? No matter how old you are, no matter how young you are, it's like there's certain qualities and certain aspects of a person that we should have been taught when we were growing up, but it just wasn't taught. And usually those things are, like people feel weird to talk about it. So when I bring it up, it's like it kind of hits people where it's not supposed to hit them. It hits them in the funny bone because they just don't like talking about that stuff, because again, they weren't really properly taught. So, and I agree, I'm the same way. But at least, like, the one thing about me that I always love is I can always instantly see where I need to, like, learn something or how I should progress. Or, like, if there's something that I don't know, I'm very honest with it. I do not know. I need more research. I need more time to kind of study this. That's why I don't let you guys trade crypto. I'm very uncomfortable with crypto because it needs more time. I need at least like another 10 years of data to work on, really. Like with the SPY, since it existed so long, it's very easy to look at its historical charts and make things make sense. But with crypto, it's all new. So, it's kind of harder. Even if you know everything. Because obviously, that means in the next couple years, there's going to be something newer that I didn't know. And yeah. You know what's scary? Is that there's stocks that, like the Dow Jones, I think it existed longer than the SPY. The SPY is around 1993. The Dow is around 18, I think, 1830 or 1880. So with the Dow Jones, just imagine. If I actually break that down, we could probably uncover so many new patterns we never seen before, because it's going to be consistently patterns basically are going to pop up throughout the whole entire trend of Dow. And as long as we can kind of track down those patterns, that's the hardest thing, is spotting a pattern, because you have to be precise with it. Like, you have to add up the same numbers, you have to add up the same ranges. It's really annoying. But as long as you know what you're looking for, like I said, you have to know what you need to improve. As long as that's where your brain is in terms of a space, you always actually uncover what it is you need to uncover. It's kind of funny. It's really weird. It's like the universe just throws it your way, because it knows now you know that that's what you need to improve, so it just occurs. Like, for example, what I've noticed is when I teach you guys how to trade, usually we trade with a certain amount of information using that week or that data, and then the next couple days when the market changes directions, it's a little bit harder to kind of tell. So usually I'm telling people, just wait on the sidelines for a second, take it easy for a day or two. Let's only trade with 0 days. Something is only $10, $20, and no, yeah, like, it really does work out, because we're not forcing stuff, we're letting the trends come to us, which still explains why we never even hopped into a trade yet today, besides the leap plays. The indomitable spirit of the human, huh? Nothing can topple it. If you want something, if you want to, change a certain way, if you want to learn something and get better with it, it's always possible, As long as your head is in the right place. That is it. All right, so I'm looking at these 1 days. I'm going to take some pictures here, just so I don't forget for tomorrow. All right, that's a nice picture right there. Let's go 2 days out. Let's take a picture. Excellent. Let's go 3 days out. Let's take a picture. All right, 4 days, or no, 7 days now. And then that's it. We'll stop right there. Okay, so we took a picture of the whole entire options chain just to see how it's going to change going from today to tomorrow. So, of course, the market's going to be like, all right, the implied volatility increased by 2%, right? But my statistic and how I calculate it, it's going to be a little different. I know it is. Because I feel like the way they measure these trajectories, these patterns, these indicators, I feel like everything is calculated differently than how it says, besides like the simple stuff. Like the 200 moving average is obviously just the past 200 days of averages, which means the last price of every single day for the past 200 days. That's what calculates the 200 moving average. So you got stuff like that where it's kind of easy. And then you have other stuff where it's like a damn science experiment, They got a bunch of numbers and exponents and parentheses and basically coding it in a crazy fashion. I mean, the 200 moving average is like that as well, but it's not that insane. Again, it's pretty easy to understand. But yes, you get what I'm trying to say. You have easy indicators to understand, which is usually the ones I make you trade with. And then you have harder ones, which is, yeah, we're not even going to get into the conversation of those. But yeah, it's just way more annoying to learn just because of that certain level of unknowing, At least when we chart our charts, they look crazy. They definitely do look crazy. But we can always be kind of confident and we can always see where it makes a mistake. So that's the cool part about the way we chart here. Again, it's the same thing every time. Take, for example, you currently being at this level right now, it's easily 1,000,000% due to DARP. So if I just measure this real quick, which is 621 in the DARP, and then I measure this right here, as you can see, because you're below this area here, it simply means on the DARP scheme of things, you are more bearish right now. You are below the midpoint. On the monthly kind of scheme, right, when you're looking at a bigger picture than even this right here, yes, of course, you're bullish. But on the daily, you're already getting bearish, which means if you fall below 613 anytime soon, you might continue to collapse here a little bit lower. You could also hold on the same area and get a double point of confirmation or get like a double bottom. But again, those are really rare. Like really, really, really rare. So let's go back into the other picture here. Did we get a new supply and demand zone? Ladies and gentlemen, it has confirmed itself. So this is a new supply and demand zone. I think Fish was mentioning this one earlier. Could be wrong though. But this one, since you're going right through it already and you're not holding, we're just going to make all of them orange for now. The only way I can make this one at the top purple, which means a selling zone, is if tomorrow we fall from this area. So if tomorrow we fall from 616, then we can make this purple. For now, we're just trying to see if this is still going to hold at the zone here. Let's go ahead and delete these little boxes. We don't need them no more. What else can we look at here? I think that's pretty much all, honestly. Now we just wait. Pretty much. Pretty much. Let's look at other companies now. Spy's getting me bored. Tesla. Stuck. Nvidia. Wait a second here. Intel's crashing, by the way, but we already knew this. Like we told everybody. It looks like this is making a little weird uptrend. And if it continues to fall here, King's Point is right down here at 17. And then you have another King's Point right about here, you could say, like right there. So then it's going to fall to 19. So these are the levels that Intel is going to fall to. Right down there. Right there. You have the current range, right? So let's go ahead and measure the range, which is something like this right here. So boom, you have that point in the middle. So now we have that uncovered. The next thing we could do here is make kind of like a newer wedge here, you could say, with this data right here from the past couple days. Getting some wedging action going on here, right? So we're seeing where all the values are, where all the areas are, the ranges, because they create these areas here. So we know that if this pops inside this triangle and it pops below it, it's probably time to get a put. But if it does it one shot, meaning you just fall below the top line, fall below the bottom line, it's probably going to hold right here at 21. So if I'm trying to buy Intel, I could also buy it here at 21, right there. But honestly, I would just wait. How did I do that? What's on my screen right now? How did I just do that? What was that? Okay, so we got this planned out. We can make another wedge at the top here. Make sure we follow everything perfectly. Oh, let me fix that real quick. Give me a second. There you go. All right, boom. So now we see that, yeah, if this is trying to go for King's Point, if it's trying to do it to the top side, that means Intel wants to run to right here. That's where Intel wants to run, $27. It just might not be time right now to run to it. That's it, honestly. It will do it though. And then after this, the next King's Point is going to be right up here at 28. Remember, this is what helps you with your strike prices. This is what tells you what strike prices to buy, what strike prices to sell from. This is one of my most advanced ways of looking at this market. It was first uncovered to me when I was looking at Tesla. That's when I first noticed it. Because Tesla used to make the big moves on a weekly occur so quickly that it would be kind of like a yearly or monthly move is occurring within a couple weeks. So the move that occurs within a couple days was just so hard to read. But it's kind of funny because if you actually take that weekly range that Tesla does all the time, and because you're getting it so much, you can actually take that data and then use it on the SPY. Buying the SPY 16-day contracts, 14-day contracts, and you start noticing that, no, yeah, the Tesla is just simply helping you. It's making you uncover more knowledge. It's making you understand what could be a monthly move on SPY, because Tesla was normally doing those moves within a couple days. So it started doing weekly moves within a couple days, which means that those couple days of data, we basically had enough information and data so that we could trade SPY, even though at the time we didn't have enough information and data on SPY. Does that make sense, everybody? So again, because a certain stock trends a little bit differently, because the monthly trend on SPY is the same thing as the weekly trend on Tesla, you could simply easily trade it the same way in terms of contract values or momentum, and it's not that far off. Of course, when Tesla's running, SPY does not run like Tesla, right? You don't consistently get SPY options that go from $100 to $1,000 all the time. But with Tesla, that's very possible. That's more, more normal. So of course, if I'm trying to trade Tesla, I'm not always going to sell out at the same level as I do my SPY contracts. I'm going to hold them a little bit longer. But I know that if I'm trading SPY, because the ranges are a little bit smaller, the momentum usually, it quits. Like, it doesn't do that big move that you think it's going to do. Usually. That's not how SPY works. Usually it does it within a couple weeks or a couple months. But yeah. I was sitting improperly for a while there. Alrighty, so that's what we got cut up. Yeah, I just said that really improperly. We have everything cut out for ourselves now, is what I was trying to say. MSTR, Boeing. We could do some Boeing charts here. Palladium, we're still waiting for this to go down a little bit more. You might hold here. So it's kind of funny how an area that we thought you would hold on after you hit a lower point is currently the trend that it just pulled off here. So this kind of shows how, again, an idea sometimes occurs a little bit differently than you planned it to occur. The fact remains, though, it did occur. But you can kind of see here how it occurred again, not the same way I drew, but kind of similar to how I drew this. It went up to the same peak, went down to the same low, and now you're holding right here. So because you did it yesterday, it might just do the opposite thing and now fall through it today. So for Palladium, I would be looking for this to fall down to this next low over here. Take a little long here and then see if it could pull right back up to a higher high before it collapses out the sky. Or it's just going to start collapsing out the sky right now. So it is dangerous to play longs because you have more downside potential than upside potential right now. But still something you could trade, Still something you could do for fun or for a test. Let's go ahead and look at SPY here. So again, SPY is weirdly holding here. It's not really doing too much. Kind of stuck at 615. So the next thing I want to see here is, can this thing run to 616? Because if it runs above it, you're going to go straight to 617. And then, of course, 618 finally. I just need some back and forth price action so we can see how we're going to continue to progress here. You're still just getting one long direction. And you still haven't hit the 200 moving average here. So that's a problem as well. So we'll just wait for the market to accelerate past the top. Once you get above 617.90, that's where things get serious. You could just spring all the way to 622. Once you get above this orange line right there, that's why I'm kind of waiting right now, because it's just stuck inside the yellow lines, which is basically the midpoint, right? So that's kind of funny as well. I remember these lines originate from a time of last year, and it's over a year. So those same lines that we use right here, they go diagonally. Remember, this is the same lines from last year that I'm using. Same exact lines. Nothing has changed. So it's kind of crazy how you're stuck consolidating in the midpoint of the yellow lines. It's so funny. Usually these consolidation points, they kind of stack up at the bottom or the tops. They don't really do this right here. From what I've seen, I haven't seen too much of the market consolidate like this. Usually it kind of pulls right back down from yellow straight down to the other yellow. Or if it bounces above this yellow one, usually it runs straight up to this next yellow one. That's why I have all these arrows pointing right next to those lines. But yeah, sometimes it doesn't really work out that way, as you can see. That's why, of course, think about it, everybody. What would have been the one way where you could have played puts here in an effective, instantaneous, whatever you want to call it, in that type of fashion? What would have helped you do that here? If you got out at the midpoint, right? Because look at this, measure this. If you measure in between those lines, the market stops right at the midpoint. Or you could have played to the quarter point. That would have been even safer. But that drop right there is only like 40 cents. So unless you had an option that was already in the money, that was, you know, going up very rapidly because that additional delta that it has attached to it, then all right, kind of makes sense for you to just hop out right away, scoop up a little profit, and then just wait. Or you could just wait for the midpoint, which usually happens a little bit more. And then as you can see, before the market runs up, it's running up because it's on this quarter point now. And then now you're right back at the middle point. So if you hold here and you fall down, you're probably going to fall down and do what you just did right there, down here. So you're probably now going to fall to 616, equal reaction, which means if we go lower than 616, I instantly know the market might pull down to a new low now because it's more bearish than it is bullish. That's what we're trying to understand and test right now. So again, just me looking at this flow here, if it's above the midpoint, just watch that reaction. If it falls below it, flip the reaction that it just did above it. So like you see how I went this far above it now? Take this box and put it below the line, and that's how far you can fall down. If you get lower than that, it simply means you're more bearish because it's doing a bigger move from the midpoint compared to what you just did towards the top. So again, this is what establishes the functionality of these lines. It establishes the entries, the buys, the sells. I think I like pulled a muscle on my chest. I'm good. Okay, so 616.52. Let's see if it's just going to hit this other line, because if it gets above it, boom. We now know the market's even more bullish. Look what the equal reaction was at this bottom part here. It was a little bit below the quarter point. So if it gets above this line here, it just needs to go a little bit above it, and then you might actually be able to yank right back down to the middle at least, which is about 60, 40, no, that's like 40 cents, yeah. That's not that much. So of course, I would still wait. To me, it looks like all these entries are just way too small, you know? It's like small fish. And we kind of don't want to waste our time with that, because then we're going to have a little war with these contracts. We're going to have to battle them. All right, let's look at some more charts here for SPY. Let me see this chart right here. Did I show everybody these? Let's check. These are like the ones that didn't make it. Oh, I guess not number 7. Number 7 is one of the best charts we've ever made. I just don't like to use it because it's very hard for people to actually create those lines. And I have chart number 2 already. So if I'm using number 7 and number 2 and it's pretty similar to each other, you're just gonna get confused, honestly. We gotta make it as streamlined as possible. So look at this reaction right down here. That's really nice. I love how you have this like weird little X-shaped pattern here. You might just fall down to the bottom here. You might literally just fall down to wait a second. Let me look at 609 puts for a couple days out. That looks really good right there on this chart. And it's simple. $609 puts are around $60 right now. For 2 days out. And we could possibly sell it for like 130, 140. It's just a little risky right now, 2 days out. Because the market might just keep climbing up and up and up till you hit, 626, like we were talking about. You might actually run up to that top area. Let me show you something a little funny here. So on some of these charts, as you can see, when you hit this area of 619, 618, all my charts tell me you're going to drop here. Almost every single one of the 500 charts, almost every single one of them tell me you could drop here. Some of them a little bit smaller than others, like this one here. This one is pointing out 625 instead. So you have a few more buying points at 620 and 625. However, as long as everybody locked in those puts this morning, you should be straight. I wouldn't be looking at puts for the next couple days here. Let them rock for like a week or two. I'll tell you when to sell them. If you still haven't hopped into puts, you could still buy, yes. But if this market runs to 624, which I'm telling you is possible to, just at least have capital to average down. If you don't have capital to average down, you might as well not buy at the second point. You don't average down when you don't have capital. So you're just going to have to take a loss and then move with another option. You got to work with what you have, so you can't play with everything. But yeah, 609 looks really good. I'm not going to lie to y'all. Let's go look at a few other charts. Let's look at these charts here. These charts... No, not these. I'll show you right now. These right here. These charts are pretty much my most... They're like my weirdest charts, you could say. They're the ones who are the most unorganized. But the functionality is definitely there. This is also going to be its own personal book, by the way. So wedges and stuff like that, I'm going to put it into its own book. So it's not going to be all in the same book with the DARP. DARP is going to be its own book. Okay, so 615, 61. Something is hitting a bunch of my alerts right now on Weeble. So we'll check Weeble right now to see what's hitting my alert. So if this falls below this, again, you're going to collapse out the sky. And you hit the midpoint, you're probably going to fall right back down to 589. Honestly. I'm scanning all puts on this board still. 590 puts have 71,000 open interest for them for 18 days out. That is a crazy amount of open interest. That's ridiculous. How about the calls? Does it outweigh it? Let's check. 43,000. 64,000. So you don't have a option that has more open interest, actually. So the puts outweigh the calls there. But let me add it up here. That's 40,000, 60,000, 18,000, 20,000, 20,000, 30,000. That's okay. 46,000, 35,000, 16,000. I'm rounding it off, by the way. Don't think I'm adding everything up. You ever seen that kid who reads the book super fast? But it's like a lie. He just speeds through the book. That's what that just reminded me of. So again, this is not going to be accurate because I'm rounding everything off, but if we look at the puts now, let's add everything up. Yeah, you have way more puts. Just me scrolling a little bit, you have like 5 options at 60K with the one that's at 71K. So you have way more puts than calls right now, 18 days out. Let's fact check myself here. Let's see if I'm not paying attention to the other options, because you obviously have the whole entire options board. It's not just 18 days, it's 20 days, 30 days. But if we check the July 18th options, yeah, there's way more puts, as you all could tell. You see this, right? Look, see? 71,000. Is that the same one? There's no way. 71,188. That's literally the same option. The same one here was the one I was looking at on my phone. So this is the one I want you guys to hop into like 2 weeks out. If you're going to hop into something 2 weeks out and you don't have that much capital, you could spend like 100, you could spend 150, buy 1 or 2 of them. Of course, I would always say buy one first, right? Logically. And then if the market keeps going up or we consolidate at this area, then you buy your second one, which is of course going to be in a couple days, not today. Or if you want to just start straight off, straight off the gate, just know you're going to have to average down with more money. So if you can't afford to take a big loss here, what you need to do is you need to look for all the volume and you need to play to one of these peaks. That's all you need to do, ladies and gentlemen. That's all I've been able to basically to kind of get to a high level with, you could basically say. Because I used to use this options board here, and not the options board, but the max pain. And of course, what this is able to actually help you with is, the whole entire range. So if I look at where the peaks are at, I know that, all right, the true range of SPY right now is kind of like 430 to like 630. Look how many puts you have right here at 470. Like, you have a crazy amount. So if I check any other day, you see how it's still pretty crazy? It's still like really red. Like, they just want this market to get shut down until like August, and then let's see if during the end of August it picks up again. Yeah, go figure. So that means September should be more green. It's still more red. That means towards the end of September. No. So you might flip up, and then you might actually crash out the sky. That's all this is telling me here. 2025, there's still more puts. So all the volume is still stuck in 500 and in 560, which is so funny. That's literally the level I want to play to, 560. That's the yearly goal right now, is for SPY to fall from here straight down to 560. It's the only problem is those options are crazy expensive. Like, let's look at them right now. 360 days out, a put for 560 costs $1,900. So that is ridiculous. But we can micromanage here. We don't have to play for 560. We could basically buy a 560. We could buy the same option, right? So we could play the same option, same strike price. It's just we go shorter on the expiration. So when it just starts to fall, just starts to go in our direction, we are going to be up, of course, 20%, 60%, 100%. We're probably going to have to sell the puts earlier than we had the calls. Unless, ladies and gentlemen, you're listening to my advice here and you're understanding you can't just throw in all your money into one option. You can't do that. You have to buy one option that's 2 weeks out, one option that's 4 weeks out, one option that's 6 weeks out, maybe 6 months out, maybe 3 months out. So that means the first option you buy, it dictates the next option you're going to buy. Point blank simple. So again, depending on the first option you bought, with how much time you bought it with, that dictates your next option and what you're going to buy. Got that, everybody? So if I bought a 560, and let's just say I have half the time, I couldn't buy something for 300 days out. I can only afford something for 150 days out. But I could buy the 560 now because the 560s are at $1,000, let's just say. That's still expensive to me. So let's cut it again. Let's cut it in half again. So that's like, what, 75 days, 80 days? So 81 days out. If I look at the 560s, let's go ahead and scroll down to it. It costs $500. So the price is, again, lower. But what if I don't fancy that? What if I'm just like, you know what? I kind of don't want to play a SPY option. It's worth $700 unless I have like $7,000. Okay, so then how do we get to that $7,000 mark where you actually could feel comfortable trading the options that we're supposed to be trading, right? Because these are the options you're supposed to buy. It's just they're too expensive. So that's the reason why you can't buy the options you're supposed to buy. That's why I'm always chopping up the market, because I'm trying to find modules where you can play to a certain goal. We know where the market wants to go down to. We know the magnet point. We know where all the volume is. But now it's just a matter of when it's going to do that. And if you can't buy something a year out, just like how we could buy Intel plays a year out, that's why I'm telling you guys, like, don't take advantage of those plays. Look at the Intel plays, look at the Baba plays, look at the Unity plays, look at all these different companies that we look at. Because the simple fact you can just buy them for $200 is a crazy shocker, especially for some of the strike prices, where it's like an easy level to magnet to, because we know what's going to happen. So what I then would do is, let's say if I have $400, right? If I have $400 to my name, honestly, I'm not going to be buying something for 80 days out. I would probably buy something for 31 days out. I would probably buy something for a 589, 31 days out. These options, I mean, the open interest, let's go find something with better open interest. These right here, the open interest is pretty good. A 586 option. But let's just say if I want to play this, if I want to get a little crazy with it, let's just say, you know what? If I'm going 31 days out, and Silo said that the market ran up within 2 months, logically speaking, that means the market should fall down to the midpoint, or at least 560, within a month, right? That should be the craziest way you could play this right now. The only problem is I would want you to have at least one more week. So let's say if we're trying to play 40 days out, because we know we're trying to play a month out, but in theory, we know we need at least another week. If you then go down to those 560 options, they're around 228. And the open interest is extremely high. So I just tracked down exactly where this 560 was already. 46 days out. That's another one where there's 40,000 open interest. And the only reason why I knew to look at 560 was, one, because of Max Payne, the website you're currently looking at. And then two, because of DARP, right? So as you can see, SPY's just playing with everybody right now. This is getting good. So the halfway point is going to be somewhere right down here now. 614, 614, 615. especially if you measure it like this from where it gaps right there. The midpoint's technically right down here because you already filled this right here. There's a candlestick there. Of course, the actual gap is the whole entire size, but that's the thing, is it gets a little weird and funky. I don't like to say this is part of the gap. Like that little price action right there, I would say that that's just pre-market price action. I wouldn't combine that and correlate that with actual price action, because this price action is just full of a bunch of big buyers or extremely, extremely small buyers because they don't have enough capital. Like that's literally the only people who are playing this market. Versus here, you're not only getting those people with extreme amounts of capital, you're getting people in the middle, people even smaller than these people over here, because futures you could trade with like, you have to have at least like 5,000. So for people who have less than 5,000, if they're trying to trade futures, they give you margin, so it's cheaper. But when do they give you the margin? Exactly during live market hours. So technically, the best data in any market, I mean, maybe not any market, but specifically the stock market, which is very, very, very similar to futures. It's pretty much the same thing, right? You get a different arrangement of buying and selling, and that's what you want, because that's where you make your money. You make your money from another person losing money. So if you made money, you always have to understand another person lost that money. So it's a nice thing. It's pretty cool, right? Because you're making money. But at the same time, if you're not considerate of who you're taking that money from, you know, you can kind of go overboard with the emotions. And that's what you oftentimes see is traders who get very emotional. Like they start making a little bit of money for themselves and then they start getting really emotional. It happens to everybody. And then they start losing everything. It's some traders, they don't get emotional until, you know, way, way later in their investment career, because they don't reach a certain level where they feel like that's the peak, like that's the cap. Basically, what I'm trying to say is their feelings get in the way and they can't tell no more. So as long as you can always tell where your feelings are kind of creeping in and they're making you really emotional, with any win or any loss, you can kind of decipher your success. It's all but just a byproduct of what you're doing again. So you're not confused if you're going to be successful. That's not what this is about. It's more so about making sure you see exactly what level you need to get to before your body starts getting emotional and now you need some extra help. Because then you know, all right, let me not put a lot of money into the market today. Let me not do this today. Let me take a step back until this occurs or that occurs. And it oftentimes will make you not lose money. It's what adds into a perfect human. We're all not perfect, of course, right? But you can adapt and you could become more and more and more perfect every single day. You could become more better. I should say, not perfect, I guess, because perfect's kind of like the end of the road, right? But you become better every single day, pretty much. Let's check some of these accounts now. So yeah, this account we're pretty much waiting. We went from, I forgot what place we're at, 3,400 and something. Climbing up the leaderboards now. Remember, everybody, you have probably about another week before I get back to 200K. So just try your best to get into the top 10. Because remember, it's not if you could do it. It's, are you ready to do it? That's really all this is about. And if you feel like you're not ready, of course, try it first. Get into the competition. See if you can just be successful every single time, right? Just claim a little 20%, 50% gain with the 100K, and you'll grow that account very quickly. You know, you'll make like 20,000 a day, 30,000 a day. Then you'll start moving into making 60K a day, 100K a day. It happens very quickly. And again, every single one of you here already have the potential to do it. So it's not a matter of if, it's not a matter of can you do this, can you make it happen? It's just a matter of, are you ready to make it happen? That's it. Are you ready? If you're ready, again, test yourself. Very quickly, you'll see if you're ready or not. If you notice that the first day you're playing with 100K, you're getting really emotional, or you're like, damn, maybe I should have sold it there, or damn, maybe I should have done that. That's the problem. It's because you keep doing that. So whether you're doing it with a $10 account, $100, $1,000, 100K, it's all the same thing. It will make you emotional, especially when there's something on the line. Like with the competition account, if you're number one, you literally can buy yourself a computer for free. So if you have nothing, this is literally for the people who have nothing, who want to be able to have a shot at this. I would say you need a computer. You definitely need a computer. The computer, they don't waste that much electricity, by the way. So even for people who have to kind of watch themselves with their electricity, if they have, you know, or other stuff that they're paying for, or if, you know, they're living by themselves and they really need help, computers, they don't waste that much electricity. So for a monitor, if you're getting a 2K monitor, as long as the refresh rate is low, because it's the refresh rate. I mean, obviously, if it's a 4K monitor, it will pull more energy, of course. But if the refresh rate is high, meaning if it has like a 144 refresh rate or 200 refresh rate, it's going to pull more energy. So as long as you can get a monitor that's only 60, the refresh rate is like 60 to 120, that's all you need for stocks. You don't need nothing more than 120. Like my monitors, they're 144. So it's like literally an extra $2, I think, a month. So for each monitor, I think I waste $6. I think that's how much electricity costs right now. And then the computer for the whole entire month is probably like $20 to $30, you could say. So for everything, you would probably spend like $40 on electricity per month if you have a computer. And then plus, if you have internet, you don't need fast internet, honestly. You just need decent internet, which is like $40, $20. You don't need to have a subscription to nothing. So for people who really want to make this happen, all they really need is like $60 a month. As long as they can make that happen and they can have at least a place to sleep. I mean, obviously you need rent to pay, of course, right? But I'm just speaking for the people who have that sorted out already, because that's a whole nother hurdle that I haven't planned for. Is like, if I'm teaching people how to make money, I have to understand that sometimes they're not going to make a lot of money because they have bills at the end of the week. So what that does is it causes them to take out more money. Like, let's say if January you made $500, right? Because of bills, you probably took out, you know, more than half of that to pay bills, which means even if you make $2,000, you're still probably going to have to take out half of that, if not all of that, to pay bills, which means there's a certain turning point you need to hit, which is around 5K, 4 to 5K a month is the turning point. That's when you start having so much extra capital that you're going to pay your bills. You're going to be able to go out and eat, enjoy yourself once a week at least, maybe save up for a vacation now. But the most important thing is it's going to be almost impossible for you to use and waste all that money now. I mean, obviously still 4K a month is still pretty low. I would say that once you get to 4K a week, like if you can make 4,000 a week, which is not hard, you probably just need around 1,000 to do that. Yeah, to make 4K a week, and by the way, not just 1,000 in your bank account, you need to have at least 5K, 10K, and then you're just going to use 1,000, and it's going to be much easier to grow it because you're not going to be rushing. So as long as you can act like, imagine if right now you have 1,000, act as if you have $1,000, right? It's like you playing with, 10K. Because what that's going to do is it's going to cause you to then average down and buy into your first contract at a proper price. There we go, fish. Some more event contracts. Testing the timing of things. That's what's up. Remember, fish, you don't got to wait for the price to hit that number by that time. If you have a limit to sell the option out, if it goes up, it's just going to sell out like pretty much right away. So what I would do is, if I'm you, I'm going to have something to sell it if it hits like a certain cent. So like if it hits, let's just say you bought it for 30, you bought it for 41 cents. I would then put my thing to sell out at like 50 or 60 cents or 70 cents. You see what I mean? So just in case if the price action picks up, you'll be able to sell out before, because you're not going to notice when it does that. It happens so quickly. The only thing that's going to catch it is if you have a limit sell. Alrighty, ladies and gentlemen. Looks like SPY's potentially running up to the peak here. Once it runs up to 617, we're going to give it just a second. We might continue to play the upside. We're not going to rush it though. Remember, if you didn't buy puts in the morning, this is your second chance now. Prices are a little bit cheaper now. I'm not gonna lie, these Nvidia trades are pretty enticing, to say the least. How much is where's 145 out on Nvidia? I might have you guys play that. Let's see this. 145, that's right down here. I think this might be a good idea here, honestly. The 130s, they're really good, but it might be a little far. Especially as time's progressing right now. So let's look at a 25-day contract. We still have 18 days, so we still have plenty of time. Definitely. If we go 25 days, and then we get a 145 costs 180 for 25 days out. It's not bad. 9,000 open interest, so it has the most out of everything. Yep, it has the highest open interest. That's pretty good. So if you're gonna buy a call for Nvidia, or sorry, a put for Nvidia, 25 days out, the 145 looks like the best play right there. For the 18 days out, let's see which one's the best play right now. Is ours still the best play? Currently, that's pretty funny actually. The option that we bought into, around the time we bought into it, they only had 30,000 open interest. Right now, this option, and I could be wrong, it might have been a little bit more. But right now, this option is at 70,900. So it either just doubled or increased by a lot, to say the least. So, and that's for the 130 strike price. For 18 days out. That's going to be a really good play here. 11 days out, I would think that that's probably a little too short, but that's honestly probably when you would see it fall to 145, if I had to say, within 11 days. But the best option here for 11 days out, honestly, is the 110s are pretty good. You have 100,000 open interest. Oh my God, they're at $5. I feel so bad for that guy. Whoever was the person that bought into that sucks. Unless they purposely bought it that cheap starting, then I guess that's pretty nice. But the best option right now on this board is probably 146. No, 155. So for 11 days out, it makes sense. They're playing close because it's shorter. So how about for the 3 days? That means everything is going to be stuck at these numbers here, right? For 3 days out, all the volume for the puts, all the open interest is kind of glued to 150. That's for another 3 days. So you might stay stuck here Maybe until tomorrow, if not until Thursday, before these people start to sell out of all their contracts, because they still have some time left. They still have some value left too. So they're probably just waiting for the next bigger move so they can hop out these puts. But I'm looking at these 11 days out. Actually, let's check the calls real quick too while we're at it. Let's go to 3 days, check calls. All the volume and all the open interest for today is at 160. And then it starts to dissipate up to 165. There's not that much people buying. So just looking at the flow like this, it looks like we got to stay within 3 strikes. 3 strikes and we're working with something nice here. So if we go to the puts, 3 strikes out, 3 days out. Yeah, 152s. It's not bad. It's right above where most of the volume is. Most of the open interest. Because remember, most of the open interest is at 150. We could buy a 152 put for 3 days out for NVIDIA. It's just going to be risky, you know. But yeah, it's not that much. It's $60. Which means if this falls down from 157 back down to the top of 163, which it hasn't had a double point of confirmation on yet, we could see a nice play here. How much was this contract yesterday? Let's see. Yesterday, yeah, this is the cheapest prices. Cheapest prices for this contract for these puts. Let's go ahead and test them. All right, first things first. Let's look at the short-term price action. 5 minute. Let me see what's going on here. You're hitting the 200 moving average for the first time today. So of course, if this market is bullish, you're gonna easily get above it. But what we're gonna do is, since this is the first time we hit it, ever since you passed it in the morning, we're gonna have this be our first entry here. Remember, the lowest price this contract hit was 55. Currently, they're at 58 right now. So we're just gonna buy one. It's not letting me fill it for some reason. It's saying I don't have buying power when I have buying power. Is it settled? It's settled cash. Options BP is there. What the hell just happened? Let's try it one more time. If it doesn't work the second time, we're just gonna say that that's a sign. Oh, it worked the second time. All right. All right, I'm posting it right now. That was so weird. Maybe it was like, I don't know. It was like lagging, maybe? That never happened to me on Webull. Alrighty, ladies and gentlemen. 3 days out, 3 strikes out. Go ahead and add everybody real quick. We'll see how it performs. We'll see if this trade goes our way or if it goes against us. Which means, of course, the first thing you should do here is make sure that the only capital you're using is capital you're willing to lose, of course, right? You have to be willing to lose it. As well as 2, SPY could run up to 624. So that's the one thing that I'm waiting for the bigger plays. We talked about all the plays we were hopping into this morning for the put side. We also talked about how there's a gap here. So it looks like you filled about 3/4, so almost half of it, you could say. So now, since that occurred, the one thing I want to see here is, let's just say we take the range from the pre-market high, because that was the highest point so far of pretty much today, technically. So let's just take that point from pre-market. We're then going to take the low that we currently just hit right now, which is about right there. Perfect. You then get this midpoint, right? And just like how we play with our other midpoints, once it gets above this area here, we can then start to say that SPY is a little bit more bullish. It might now run up to the peak, which is the top. And if it can't get above it, it might just fall right back down to this bottom area here. Of course, it's around 11:40, so it's a little bit later in the day. We wanted our first entry on SPY to be at the 3rd or 4th reversal point, and we didn't get none of that. So all we did right now was play the touch of the 200 on NVIDIA. Very simple, very fast, very quick idea. We're just going to see how it works out. We're not going to worry if it's, you know, consolidating and going on the line and doing all that stuff. That's unnecessary. If that's the only amount of money you have, of course you're going to do that, right? But if I'm fine with losing 60, I can truly actually see if this trade's going to go in my direction. Or I could truly see if I was wrong. That's all. You're above the 200 now. So just remember, the greater scheme of things. Oh, I was like, why am I zooming out on the 5 minute? I was like, why can't I see nothing still? So you hit this area up here. Let's go to the 1 hour. Yeah, let's go to the 1 hour. So go to the 1 hour. You hit this area here. You didn't really fall down that much. You hit this area up here. You didn't really fall down that much. So yeah, you might actually have a bigger move in this little range here. Plus 160 or 159 is the top of the range. And if I go to the 15-minute real quick, let's go ahead and measure this week's range. That's pretty nice. Look at that. You see how it's like stuck in between these boxes here? Like when you first ran all the way up over here and inside the box, it then fell down straight to here and then ran up to here. So this is perfect. In terms of the weekly range, like the past 3 days, NVIDIA is above the midline. So of course, this means it's more bullish than bearish. The next thing I could do here is just split it up again. Of course, this is where it gets a little complicated with all the boxes and stuff like that, but I split it up again, and as you all can see, you're currently stuck at that area, at that quarter point. So this is a pretty good area. It's a pretty good buy. It's towards the top of the range, towards the 75% point of it. And we're just looking for this to fall down and hit a level that it hasn't really hit here. So again, it was 150, what was it, 152? I forgot already. 152.50. So it's a 152.50. If you look at this whole range, the only thing I'm looking for is since you hit the top, since you're at the middle, since you ran to this quarter point, I want to see if it can at least fall down to 155 or 154, which means by the time it falls down to 155 or 154, if it can happen by tomorrow, basically this option, I could sell it out for around 99 to 120. As long as you hit 154. As long as you get beneath 155, that means this option will be next, which means this can go from 50 to 180. That's the max. 50 to 180. That's kind of what like the peak you would be looking for. So like you would be looking for a 200% gain, or is that more? No, it's 200%. Yeah, it's 200% gain, and then that's pretty much it. You wouldn't look for nothing more than that. Since I bought it here, if we continue to consolidate a little bit, and then by 12 o'clock or 1 o'clock, this option drops to around $30, I might think about buying a second one. But for now, I'm just going to hold it. You went from $56 to $53. So now we're down about $3. It's still 3 strikes out until you get to 160, and then it's going to be 4 strikes out. So 160 might be a little bit more tough because that's where all the volume is for the other side, for the put side. So we'll see if we can get above that 160 mark. It might be a little hard here though. And if we just do it, of course, it's under the assumption that SPY is running to a new high. So simply NVIDIA is just going to do the same thing here. If you really just zone out here, you would see that NVIDIA has already made new highs once it went above 153. So currently right now, you only made a $6 high. We want to see if this is the peak of like the monthly trends. So all we're doing right now is we're testing puts at the top near the high for this to simply fall any amount. It doesn't really need to fall a crazy amount. It just needs to fall down to 155, 156. And our option is going to be one away from being in the money, and then we could sell out. That's the plan right now. Or we just wait for it to fall to the midpoint, 156, which is about $2. We could probably sell this for $70 to $80 from 60. So remember, we're not gonna fight with it. We're just gonna test ourselves here. For Tesla, it looks like you might start launching here. You're consolidating in this wedge-like pattern again. As you all could see. Really nice wedge on Tesla right now. Which means if I just measure everything, that's the midpoint. That's where you're currently at. You're just stuck at the midpoint right now. But if it holds here, I could definitely see Tesla running up to 355 again. So what you could do here is, as long as it holds 320, you can get some 355 calls on Tesla for like 2 weeks out. That's not a terrible idea. That's a pretty good idea right there. 2 weeks out. It's not too far out. And then the next thing we want to do here is, let's look at some of these other SPY options. Let's also trade some stuff here. Let's go look at SPY. Are you ready to trade SPY? Come on. Okay, we're going to get into this trade here on the competition account. Full port, full port. Full port, everybody. Don't full port if you don't have extra capital, please. Everything was filled. We needed to buy 190 more. Again, we're playing the put side because I want to see if this is just going to go right back down towards the middle here, 616. Once we hit around 616, I'm just going to sell out of everything. I know we're at 616 right now, but, 50 cents lower. And then if we go above this this white line right here, I'm just going to sell out of all those puts that I bought. So again, if we go above that white line, I'm going to sell the puts that we bought. Try to see if I can sell it instantly. And then I'm going to try to see if we could just scoop up more puts at 617 80s, which is the top right here. So that's the next goal right after that. All right, there we go. We now bought all of our puts. We're now locked and loaded. Let's see if we're going to have to get out of this. Next thing I want to do here, while we wait for this, is, of course, no new supply and demand zones yet. That was a really big zone we made right here in the morning. That's a huge zone. I hope this one turns purple. That would be a really nice purple zone here. And then hopefully we might get another one down here that's yellow, potentially. Somewhere in the middle of here. And that's the one thing that also kind of tells me this market's going to fall down, or wants to fall down a little bit more here, is because you need supply and demand zones, but every single time you make a new high, it always does the same thing. So, yeah, that's pretty much all we're waiting for right now. Alrighty. Looks like you're getting some tiny little drops here. We're up already 10% on this. Again, everybody, we're up 10% on these trades already. They're holding on this quarter point, so this might not be good. This might just want to run up higher. We'll give it a second, though. Again, since this is above the midpoint diagonally, which is kind of funny, right? It's like you have a diagonal midpoint, you have a horizontal midpoint, and I'm pretty sure you can understand that if my lines are right here and I have a midpoint, I have another midpoint for these lines, these lines, these lines, all over the place. There's midpoints everywhere. So when you use this midpoint strategy, it's like you have to understand when and where to put these lines. Everything is very important. So again, let's see if this is still going to get shut down here. We're still up 10%. Let's see if we could sell this for like 20%. That'll be nice little bonus right there. There we go. Up 20% here, everybody. You can start to sell now. That was an easy, nice little trade right there. Easy little trade. Come on now. Again, everybody, you can sell out if you want. You can sell out if you're trying to play it dangerous. If you're not trying to play it dangerous. But just remember, you got to be quick with it. You have to be quick with the 0 days. Because if you're not, it's just going to come back to ruin your whole entire day, week, month, year. It's going to attack everything, let me tell you. I remember sometimes I would be down like a certain amount, and I would be like, yo, all my hopes and dreams, 3 years out, 5 years out, they're ruined. I used to be so dramatic when I was first trading. That was also one of the reasons why it took me so long to kind of snap into a decent mindset of being able to trade properly. Because I started getting really emotional after I made a ton of capital. And no, yeah, it just didn't really work out on us, honestly. Because I wasn't able to listen to myself or notice. Because before, when I wasn't getting emotional, if I had like a close call, I was just like, all right, I'm just not going to do that no more. Like when I had that close call with Tesla, after I started trading Tesla with 3-week options. After I almost lost everything with the 1 weeks. By the way, I sold all the SPY options. We already took our $6,000 gain here on the competition account. And we're just going to keep doing this all day. We're just going to keep scalping the market all day. Just like that. And we're going to try to see if we can take this account. And remember, we're placed 3,400 in the world. I was placed number 6 to 10 the whole entire time. We then basically dropped out the sky. We forced ourselves to start with nothing. We had only 20,000 on Friday. And now this same account is already at 60,000. So that's, you know, that's a change of 200% within a day, basically. Friday to today. So I'm sure you could assume that if we keep going at this pace here, this is a really nice pace. We don't got to rush it. We don't got to make a stupid move. We just got to slow it down. Once the market speeds up and SPY speeds up, then we start to be like, all right, now it's going to actually go way lower. Now it's going to actually go way higher. As of right now, unless you guys are using my CS zones, you're not going to know where this market's going right now. So let's use them. So if you're using the CS zones right now, you can obviously see that it's hitting the midpoint of the zone and falling right back down to the bottom of it. And you still have not made... Oh, you did make another one. You made one more right here. There you go. So you have 2 CS zones, which means if I'm going to buy calls for SPY, I have to be buying below these 2 boxes. You guys understand that? So that means that yes, we could play for a new low, but in theory, did we get that low yet? No, right? So in theory, you wouldn't be playing puts inside of the consolidation for it to fall out of the consolidation. That's how you lose a lot of value very quickly. And now you need to average down at a stupid price, and then now it's all unnecessary and all over the place. We all have to go through it, of course, in our own, ways. But that's when you start catching yourself and you're just like, you know what? Let me not buy right now. Let's just take a little break for a second here. Let's wait. Once it falls out the box, we buy some calls very cheap. See if it could yank up to the top. Because that's literally what it looks like it's going to do, which is kind of funny because that also goes hand in hand with the gap strategy that we have. So whenever a market makes a gap, there's a certain strategy we developed. And if we look at both of those strategies, they literally perfectly play in correlation with each other right now. It's kind of funny. So, yeah. We're still not worried about this, honestly, everybody. And then do you see how I sold out of my option? Right now, I would be down if I still held those puts. So, like, it's not a matter of what is happening. Or no. It's not a matter of what can happen. It's a matter of what has happened. Because then you can start to dictate what's the path forward. Because the path forward is oftentimes going to rhyme with the current path. But you don't want to keep looking at the market in a way where you're like, all right, January you thought you were going to play puts at a level. And now that it's at that same level we were going to play puts at. Because remember, in January, we were supposed to play puts at 618. 618, that's the level we were supposed to play puts at. But then when we started getting to 609, we started falling crazy out the sky. So then that's when I was just like, wait a second. It might be peaking here at 609, 610. And then you got that last touch of 613. 2 days later, Trump comes out with the tariff news. Boom. Market falls from the sky. So, yeah, you're just at the level we were supposed to fall back then, which means that if you really want to fall lower, you might be a little annoying and you might go up to the 620s. So that's what might be pulling the market up right now. Remember, might. Pay very close attention to the wording that I'm using. That might be the causation of this market wanting to go up higher. However, with how this looks right now, if today stays within this range and you don't do nothing greater than this, it's telling me that there's going to be another giant move that's going to occur. Because every single time you get a $2 day, where it's just $2 of a range from the opening price to the end of the day, like whatever that range is, as long as it's less than $2, it tells you there's going to be a giant move. So just give it a second. Give it a second. Don't rush it. That means if you're trying to get calls and puts right now, scalp, please. But don't scalp with your whole entire account. Scalp with $20, $10. So, you know what I mean? It's never a worry. That's the trick right now, is just using a safe amount so that you're always not emotional. You're always actually trying to look at what's the best play. So, yeah, that was a nice little scalp right there. As well as we were above the EMAs. That's the last thing I forgot to tell you guys. That was one of the final reasons as to why we got the put there. Because, again, we were above the EMAs. So we just wanted to see the market fall down into the EMAs and at least get near the bottom of it. Maybe potentially jumping out of it from the bottom, which it kind of did that on the 5 minute. You can also do it the same way on the 1 minute. It's just, honestly, if I'm trading scalps, I'm trading on like the 3 minute or 5 minute. If I'm being honest. Anything that's lower, it's just like it makes you too emotional, you know? It hits you right in that area where you don't like it. And it's just like, yeah, might as well just not even deal with that. Once you get a little bit better, of course, if you don't get emotional, oh no, yeah, trade with the 1 minute. I would always suggest that. It's really fun. It makes you not just want to wait there and fall asleep. Because there's always action. Alright, so give me a second. Let me use the restroom. And then we're going to take a little break here because we had a nice little successful trade right there. We got into an NVIDIA trade. I had everybody lock in some puts. Everybody knows how to continue playing the calls going higher. So everybody, you're already set. You already know what's going on. You're all on the same page as me. And if you don't, know what's going on and you're not on the same page as me, just keep it simple like this right here. Let me find out where the hell the chart is. We'll just use this chart right here, honestly. The reversal chart. So keep, again, real simple. If it gets above, I'll delete these lines so there's not that many lines on your screen here. Give me a second. If it gets above the yellow line here, which is, again, the yellow diagonal line, not the VWAP. The VWAP is the only other yellow line that I have. You could tell if it's a VWAP line or if it's a straight line. But once it gets above this straight line here, see if it can get above the orange one. Because if it can get above the orange one, you might start shooting up into the new high. If it stays stuck at the orange one, meaning you just run up to here and slowly hit the orange one, then you fall, you might just go right from the orange line to the yellow line here. So that could be your next put play, is right up here at the orange line. That's honestly what I would be waiting for. But yeah, I'll be right back. God, puts. Puts. Steady, everybody, steady. Keep the fishing pole steady. Don't let it get away. You gotta get the bait first. You gotta throw it in. Right now it's nibbling. Then you gotta slowly start to reel it back. Come on now. If it passes that blue line, since these are 1 day, we still have plenty of time, right? Meaning they're only going to be down around $5 from 20. So we'll possibly see if we want to sell out if it gets above the blue line. What I want to see is if it hits the blue line, it potentially will just fall right back down to this blue line right here, which is basically the same one it ran up from the whole entire day here. So we'll see if it gets above it. We'll sell out. And then potentially at these red lines at the top, if not at this red line at the top over here, which is around 621, we'll start getting those other puts that we were talking about. Remember, we don't want to play against the trend. That's the reason why if this falls down here, see if it's just going to hold on the top of these boxes, because then you could just play the continuation going up higher overnight. You still have around 30 minutes to get into a contract, so you still have plenty of time, right? We'll see if it falls down. We'll see if it gives you a double point of confirmation. It's the oldest trick in the book, right? Double point of confirmation means you get above a certain area on the 5 minute. So let's go back to the 5 minute. So you get above a certain area. Once you get above it, you need to fall right back down on top of it. Hold. And as long as you hold on top of it, you could potentially see this going up higher. So if you're trying to play overnight, that could be what you're trying to get into here. I currently have a 1 day contract that I got into right at the line here. And currently it's down around $2. So we're just giving this a chance here. So if it falls back down, I'll probably be break even. And if I notice it looks like it's holding, and of course I'll explain to you what that means when we actually fall down. It's better for me to actually show you instead of me, speak it. So yeah, we'll see. When it falls down here, I'll show you exactly if it's holding or if it's starting to break through it. The 200 moving average is still way below us, so we didn't really go below it at all, honestly. We kind of did what I thought we would do. And remember, everybody, what did I tell you to do in the morning? The first thing I told you was at 6:15, once we hit that area, you're going to get into a $20 option, whatever the $20 option is worth at the time. And it was kind of funny because the whole entire options board just got destroyed right there. So everything was very cheap. So as long as you bought when I told you to buy in the morning, and you could, of course, replay the video, go to the beginning of it, go to like 9:30. I might have been live a little bit earlier. Actually, I have no idea when I went live. But, I mean, you'll figure it out, right? Just look at the bottom of my screen where it shows like the time by the extended hours right here. And then wait for the morning time, or replay the video back to the morning time, and then you'll hear what I'm saying right before the market opens up, as well as when we actually fall down to the bottom right around this time here. Fast forward, it's like 9:45. You'll hear that I tell you to wait for number 3. I specifically say wait for it. So as long as you had it on your screen, you had 1 entry and then 2 entries where you could average down, if not bought more, to play this crazy upside. And it's kind of funny how that was the one time where the market ran up really quickly, is the first thing I said today. So that was one of the reasons why we were so quiet all day today. It just looks like it was going to go to those exact levels, especially when you hit number 2 and you slow down. We've been dealing with this so often the last couple of days. Watch, tomorrow we're probably going to hit number 4 and number 5. So if I'm you, I'm probably going to be like, all right, let me just wait for number 5 tomorrow. If we only hit number 4, you're still going to put something into the market, which is the one thing that everybody needs to understand. I think that's the one thing everybody gets confused. When I have you get into these entries, you're getting into multiple contracts for multiple different times throughout the day. It's all different plays. Take, for example, how you're falling down on top of this orange line right here. The contracts we bought into before at $20, they're basically right back at break even. And this is basically you holding. Simple as that. You can obviously see how strong it is, right? How bullish it is. So the one thing I would want to see now is, since you fell down that much from the body of the candle where you first began, that's the current wick that you currently have right now, right? So how you can easily tell if a market's turning bullish or bearish is You go from the top of that candle, you go down to the wick, extend it a little bit so you can grab this, put it at the top, and that's how much this candle should be able to run up, no problem. That's an equal reaction. If it just falls right back down and gets below the orange line, point blank, you have a certain area, you magnet it back to the origin, and you're still falling down, that's bearish. That's showing the market trying to break out, trying to even itself out, trying to claim new highs, but it still cannot, and it still can't give you an equal reaction. So for instance, this right here looks very bearish. It might actually hit the top of that yellow box, which is, remember, this is the morning price action. So whatever you began in the morning, whatever was your high and your low, that's what that box right there signifies. That's the CS zones, right? So again, you're holding still. You're not getting below that line. So if you're getting into calls, this is not a bad idea. If you get below that orange line, then you might have to get out. Or if you get into a call, you could use this yellow box as a little stop loss. So if you get below the yellow box for whatever reason, even if it's for you to hit the EMAs, you're just going to get out. That's the only thing you have to understand. For me, right now I'm using this orange line as a placeholder. I want to see if it can actually get below it, because then my contracts are going to turn profitable. And by the time it hits this midpoint, which is at 516, about $1 from where we're at, we should be up at least $4 or $5. However, we don't have that much time today, so we're working on limited time. The only good thing that's working in our favor right now is that these contracts are 1 days. So their value is basically just holding. Which means you're not going to make as much, of course, as with a 0 day. However, we can slow things down, just a little bit. And it kind of helps out because now you're able to actually understand the reason why we buy and sell at certain locations, just because it's at that location. That's the only reason why we got into the puts right there at that orange line. Now, of course, you're above it, right? So point blank, the idea is you are, more bullish than bearish. So let's just say if we had like, $1 million account, or we were working with something where we had like 10,000 into the trade, I would have already been out the trade. The second you went break even again, and I saw you holding and not get below, and I saw you just wick up a tiny bit, instant market fill. So that's if we were playing with a big account. Since we're just playing with a smaller account, and again, since it's also a 1 day, we're just going to hold this for a little bit longer, and we want to see if you're actually going to get below that yellow box right there, or at least touch it, because then if anything, we'll just sell out for a loss, break even. Or if we get above that other blue line, which is right above us, we can also sell out for a loss right up here. Which is, again, we're only going to lose around 15 up here, theoretically, because that's 518.74. Currently, you hit 518.24. So yeah, it's only like 50 cents more, It's not that much more. So if it really wants to break out, again, understand that we just basically explained to you while the market was up here, before it even fell down in the first place, we told you that it was going to fall right back down to the orange, if not the gold. That's why this little point right here is in between both of them. It's kind of, a little bit closer, I would say, to both. Not really going on one side or the other, so I can't really even say that we did do that on purpose, right? Besides the fact that the only thing that was purposeful was to put it in the middle of both of them. And as you can see, you got that downside. It then held, and you then flipped right back up. If you had 0 days, of course, you would have made a profit. 1 days right now, even if you had calls, you would probably still be like only up like 3%, really, 4%. You wouldn't really be up that much, honestly, with a 1 day. Which is the only problem, What I'm trying to honestly master is the concept of being able to have a 1 day contract, and that contract that costs $6 go up to like $100 the next day. That is honestly one of my that's the only thing I think I haven't really tried. I've done the 0 days. I know how to turn $5 into 50, $5 into 100. We've even turned $5 into 200, if you guys remember that in January, where we all got into those contracts and they went up about 5,000% overnight, and we were basically in the money. That's the reason why. So it went from us being out the money by like 10 strikes to us being in the money by like almost 3 strikes. No, were we in the money? We might have been like one away from being in the money. All I remember is I saw that gain and I market fill. That's it. So that's the goal, honestly, right now. Try to see if we can consistently get into plays with only $6, $10 overnight with maybe 2-day, 3-day contracts, and try to see if we can master those. Of course, that means we will only get into those trades during certain weeks and certain times. So it kind of makes it a little bit simpler for us. There's a pattern associated with it, basically. So now, yeah, tonight, what our goal is going to be is basically I want everybody to be able to have an opportunity here, right? So the only way that that's possible is if everybody's able to actually only trade with $10, $15, $5, $20, something that's just not too much, but, manageable. So as long as we could figure that out tonight, where it's a little bit more consistent, maybe we start playing SQQ contracts, QQQ contracts. There's many other names that we can try to trade, which are like triple leverage or double leveraged. So we'll start looking at that more today. And then we'll try to see if we can figure out something else. Because there has to be another way that we could trade these contracts. Because think about it. Sometimes you look at these contracts values and the previous night, that thing was like $4. The next day, it's like 80. And I'm just like, all right, hold on. Wait a second. I've seen this too many times in the last 3-4 years. Something is definitely off about this. By the way, you see how you touch the top of that yellow box? That's what I was referring to. So now at this point, if we hold, and let's say we get above that orange line, instantly I'm market filling for a loss of like $1 or $2. I'm just going to take that loss with the 1-day contract. Because remember, it's a put. If obviously a SPY's holding here, it's for a reason, and it's because you might actually want to run up to 624. So if it wants to do that, I wouldn't really fight the trend. We're honestly just waiting for it to hit 624, 625. And then instantly, I don't even care how much capital you have. By the way, market fill, we're going to sell out for a loss here. It's currently around $19, so we'll take a $1 loss. Now you're right below, so you can cancel it. Cancel it. Cancel it. Cancel it. Cancel. What was I saying? You might have to put it back now. Yeah, you might have to put it back. Just give it a second. Give it a second. It's hitting the line and deflecting off of it. That looks bearish. So let's give it a second here. Remember, if it gets above it, this looks bad now. All right. It's still the same price, by the way. It's a 1-day. I'm sorry to make you panic. All right, yeah, just instantly fill here. Market fill. Just get out those 1 days. If it falls below the yellow line, we'll just hop in because they're going to be the same price. You got that, everybody? So again, that's one margin trade down the drain. Remember that going into tomorrow. And then we'll try to see if we can make up for it tomorrow, pretty much. We'll see if we can get maybe a 40%, 60% gain on whatever we have left, which is $17, right? This is one of the smaller accounts. Until we get every account over around $100 to $200, we're not really going to start to amp it up too much in terms of, the 0-day trades, because it's just a little too dangerous, right? Especially with the momentum. If it starts to dry up a little bit, you'll start to notice that all your contracts, basically, regardless of where you got them on the board, they just start to lose value. Even if you got one contract that's like one strike away, you'll start to notice that when the momentum dries up, kind of like how it did throughout the whole entire day today, before it went below the 200, which is kind of funny. Remember, I always tell you that in a bullish market or in a bullish setting, the best time to buy calls is, of course, always below the 200. Vice versa with the puts. You want it to basically do a ghost touch, which means one day you don't touch the 200. And then the next day you're oftentimes going to touch the 200 around like 11 or 1. So you could just play puts around that time. As long as you basically did a certain pattern the previous day, which is, very consistent, by the way. It does it all the time. You'll be able to actually tell that the next day, all right, I'm going to play these puts at that time. And I'm just going to wait for the highest point of the day. And that's pretty much it. All right, so to play the calls, I'm pretty sure you guessed it. It's either on top of the yellow box, right? Or because you already made a new zone, you could basically say the second it gets above this zone right here, which is 618.07, you might have to watch out for a quick little put play. It might just drag you right back down to the bottom of it. Just because after you made the zone, right, which is, of course, over here. That was the bottom of it. That was the top of the next one. After you made it, you never really went above it. Besides, actually, right now you just did. I think you just did it right now. Yeah, I think you did. It looks like you just did it right now. Yeah, you're doing it right now. So basically, just watch out because the market might drag you right back down here for a second. And again, you'll see why I know this, or why it actually is something that we use in terms of a trading style. Just give it a second, you'll see. And if it gets back to the bottom here, I'm just letting you know. If you haven't sold the puts already, and it gives you another entry down here, you might want to sell these. Because, it might not give you another opportunity if it holds here. Of course, you might fall right back down to the 200, but at the same time, you already satisfied that trend today. And I think you even did it on the 15, if I'm correct. Let me see. Let it load. So you didn't do it on the 15 today. You didn't do it yesterday. That might be very bad, actually. You didn't do it the day before. That's 4 days. That's a lot of days, gentlemen. That's a lot of days. That's 5 days right there. That's a lot of time. You might actually just come crashing right back below this. For those of you who don't plan on having a stop loss and you plan on holding those contracts for tomorrow, maybe it's not a bad idea, honestly. Because think about it. You filled how much of the zone? Half of it, right? You're right back at the high. Listen, y'all got 15 minutes here. Maybe this is not a bad idea to get puts for this to fill and come crashing down below here tomorrow. That might not be a stupid idea. And then at the open, maybe we can get to the calls. Maybe that's how the flow is going to pan out here. Truly, in order to actually figure out how the flow is going to pan out, you're going to have to measure things. So since now we have a new high of the day that's higher than the pre-market high, if we actually range this here and measure it, just like that, the halfway point is basically right around here. So if we fall down, we're most likely going to fall down to the halfway point of that high we just made. So honestly, you just watch out because you might actually come crashing down lower. It might not hold here. I would just wait for tomorrow. If not, if you're really anxious about this and you really want to get into something, simply get into a 5-day or 7-day call for like 561, 564. And I don't think that's going to go really against you, honestly. The only thing that can go against you right now is the fact that there's a current gap right now. We filled half of it, which is normally what I told you to do. That's basically why I told you to buy a number 3, by the way, is because that's around the halfway point of the gap that we made last night. You still have to fill the rest of this right here. And you could literally just fall right back down to fill that tonight. And then once you fill it, which is going to be still right around this blue line, which is kind of perfect. Like, look at my cursor. You see how it says Tuesday at 11 o'clock? When we open tomorrow, this is 9 o'clock right here. That's 10 o'clock right there. So you would literally be able to fill the gap at 10 o'clock and maybe go a little bit lower than it and hold. And we could probably buy calls down here somewhere. In fact, I'll just circle it for you right now just so you can see that tomorrow, that's the same circle we want to buy at. So we already have our point that we want to buy tomorrow in terms of the calls going up higher. Now, let's say you have another case in another scenario where this wants to go up to the highest point, which is 624. How would you play this here? Honestly, you can get into a 1 day for like 625. It's like $9 if you really want to. It's not going to be that much money you have to spend. So again, it's not a stupid idea, but with what we have in front of us, not everything is aligning in your favor for more upside, is what I'm trying to say. It can go up because that's a psychological level where the market likes to kind of radiate towards before it falls. So logically, it can occur. So if I'm going to play more upside, I'm going to play off of those blue lines that you see on my screen. So once it gets above that blue line, which is around reversal point number 2, that's basically when you can get into another call. So it's going to be a little more expensive, of course, because you're getting it while it's up, right? And of course, that adds some extra risk, which you kind of don't want, because momentum is going to be high right now, which means tomorrow, if momentum is a little bit lower, you already had a loss. So we kind of want to make sure that we're always successful in like the lowest momentum setting. So like we want to buy when the momentum is really low and people are not really buying, which is those points right there at number 3. Nobody was really buying the market, and then you just collapsed very quickly and then just instantly sprang right back up, collapsed again to that level, held, instantly started jumping right back up to the next high. So there's a reason why this occurred, and we literally planned it out before it actually even occurred, just from what we recorded today, right? And what we did today. So again, if you get above the blue line, we'll continue to play the upside. We'll play to like number 3, if not number 4. And then maybe once you get above number 5, honestly, I want to wait for the red line. Once I see it touch the red line, which is probably tomorrow or maybe another couple days, that's probably when I'll get some puts. Anywhere in between, it's just going to be cheap stuff, 1 day, 3 day stuff. You know what I mean? We're not going to put too much money on the board. Aside from this morning when we were buying the leap plays, which by the way, do not average down on nothing. The only time you average down on your leap plays is after 5 days, 10 days, 15 days. You don't want to put too much money on the board. It's fine if it goes down. It's going down because momentum is dying. That's the only reason why those long dated contracts go down. So as long as you could deal with the momentum dying and you could buy when it's actually very cheap, or like let's say if I buy something for 200, just put an order in to buy it for like 150, 130, you know? And no, yeah, that's pretty much how you could use the leap plays to kind of work in your favor. Again, for the SPY plays here, wait for it to get above that blue line there. If it can't get above it, again, you're just going to collapse right back below to that next blue line. And the only reason why I say this is because when you actually pass 515 last year, as well as when you pass 548, 558, 568, all those different moments, you started retracing right back down at that level. So it's just a yearly trend that we're trying to use here to our favor. So yeah, we'll see. If you could lock in some puts now, maybe it's not a bad idea. I would say, again, just watch out. Put a very low amount. Make sure it's at least 1 day. So, you could just wait for tomorrow. Because, again, we still need to fill that gap. However, if it just keeps running up here and we don't fill the rest of the gap, if it just filled half of it, and let's just say we go straight up to 524, I'm pretty sure you understand how many the strike price for the puts that you're going to play a couple weeks out. And oh yeah, it's completely right back down to 513, 514. That's going to be the first main area, and the next main area is going to be the 590s, and then the 580s. After 580, you might actually hold. So I would say if you're playing leap plays, once you hit 580, you might just want to lock into a call play just in case, like $100, $80, and just say, you know what, screw it, I'm not going to pay attention to it no more. You might be able to want to do that. If not, you're going to just have to wait, honestly. So again, you're at 618 right now. And by the way, how high can SPY actually run up? Just so you can understand and you all can remember it. In truth, SPY can actually run up to around 640 just because of the recent reaction you had from the 590s, right? So if it really wants to, you can run up to 640, which is why I'm telling you to wait for these certain areas to hop into the yearly plays for the puts, because it's going to work out. It's just you have to deal with the consolidation for that week. And then when I tell you to sell those yearly puts, and I'm serious, like I tell you to sell those puts in the Leap channel all the time. I give you a complete guide. So as long as you follow that and you pay attention to everything and you always read everything for that day, I mean, no, yeah, it's not gonna go past you. But yeah, when I tell you to sell out of the yearly puts or the monthly puts or the weekly puts, just make sure you're coordinating exactly what I'm talking about. And yeah, get rid of it. It's not a bad idea. Because if this falls down to 540, I just want you all to have at least one runner with enough time. As long as you have enough, time and a runner, no, yeah, things are gonna work out in your favor here. I just really want to see if it's gonna fall down because it's still at 518. It still technically has not passed 5. Did it pass 518? I think it hit 519 now. Did it hit 519? 519. Yes. So you're now at 519. So let's see if that's gonna still hold it. If you get above 519, you get above these pink lines here. Again, you're gonna run right back up to this pink line. So that's another location where you can hop in for the calls. Or you're going to potentially actually run up to the red line all the way at the top, which is around like 421.70, you could say. If it just deflects off of this and you just fall right back down, you're going to fall right back down to the same area you just came from. So you're going to lose all this value. As long as you can get above this pink line, you'll start to continue to head up higher, right? Just use those diagonal lines in your favor, and I'm sure it's going to work out. For the supply and demand zones, we didn't really do nothing, honestly. We didn't create anything new. Again, you're just reaching into the sky right now. So if you never locked into your leap plays, and you want to lock into your leap plays right now, this is not a terrible moment, ladies and gentlemen. It's definitely not. What type of leap plays would you hop into, by the way? You have 5 minutes. So the leap plays that I would hop into if I have some extra capital here are... Make sure you're looking at the screen here if you get a chance. So let's see. Look for whatever has the most open interest, right? That's the most important thing. On Webull, this is garbage. I don't know if on Moomoo it's just more. The open interest is terrible. Let me see. 10 days for puts. Terrible. 11 days. That's a lot better. Look at that. 27,000 at 585. That's a really nice put play right there. That right there, 11 days out. That is not terrible. In fact, I would honestly buy this play. I might even buy it right now. This is not a terrible idea. Let's see if we can find something better. We still have how many minutes? We can still buy up to 15 minutes after, since we're going to buy a Webull. So we still got some time here. If you got Webull, again, you could still buy 15 minutes after the market bell. So especially if it's a SPY option, you're good. So we'll kind of chill out here. There's no open interest here, as you can see, obviously, for 14 days out. 18 days out for the puts. There's a lot of open interest here. 600 has 41,000. This one right here, do we have this one? No, we don't have this one. That's 580 for 130. That's not bad. $130. And now, yeah, look at the volume. So you see how they're buying a lot more? Is because they know this is gonna flip. So of course, when it gets cheaper, the volume starts to increase like crazy, which is completely what's happening here. Whoever has these contracts, they're just averaging in like crazy, which means this next bit of volume might increase here. They might just buy a lot. So if you're trying to buy this, you might be able to get this for a cheaper price because a lot of people are trying to buy into this. So again, put your limit real cheap if you're trying to, spend 130, 18 days out. Let me actually take a picture of that. Can you please take a picture of it? Hello? Let's do it myself. Does that work? No? I think I broke the computer. Can you please? I'm running out of time. It's not working. Let me see something real quick. I got an idea. I think if I go like this. Alright. And then if I go here. You go to here. Alright, it's whatever. I'll do it with this. See? This is going to work. Watch. See? Told you. There we go. Alright. Can you get off my screen, please? Now it's not getting on. Okay, there you go. Alright, so like I was saying, that one right there is for 130, 18 days out. That's not a stupid idea either. In fact, that's a really good play. 18 days out, 25 days out. Does the open interest increase? Not really. Kind of. Oh yeah, it does. Look right here. Who the hell is buying 515s? 78,000 open interest. Which means if I check the calls real quick. Now yeah, there's way more open interest for those puts. You guys see that, right? Look at the calls here. And then look at the puts, 25 days out. Look at the open interest and how it just scales up. They probably bought this from 151,000. When did he buy this? 606. How long ago was that? That was this month. See, he was buying at 64. Yeah, that's insane. $16. 158,000 right here. That's crazy. There's a lot of people buying puts. I'm telling y'all, this market's gonna crash. I hope you're listening to me. As long as you just keep buying puts every $5, $10 and just put a safe amount in every single time where it's not unreasonable and it's just like, you know what I mean? It's just right. I'm telling you, you're gonna get very rewarded because this market is very, very unstable right now. It's terrible. This is probably the most unstable I've ever seen the SPY. It needs to reclaim a lot of territory, and I'll show you right now with the bigger chart. Just by me showing you this one chart right here. Hey, you're just holding on top of the wedge here. You're just messing with short-term price action. So let's go ahead and look at what chart is it. It is not this chart, not this chart, not this chart, not this chart. Where the hell did I put it? Don't tell me I deleted it. I would hope not. Let me see. Alright, so let me see. Yeah, I don't think I have it here. I honestly don't think I do. Why do I feel like a lot of these pages just got deleted? Yeah, like this right here shouldn't be here. It should be SPY. But even if it's SPY, it doesn't really change nothing because I don't have that chart updated. Alright, let me just open it up. Alright, anyways. So, as you can all see, with this chart right here, this was how we predicted the market falling out the sky before. And what you simply did was you ran up way more than you were supposed to. That's all you did. So I'm just letting you know, if you fall back but below 613, 614, it is not a good sign at all. And if you look at the gap that we have here, I mean, you can obviously tell that you're positioned literally just to hit 613. So it's kind of funny, but if you literally fall back down to that same exact level, 613 level, you could still fall out the sky still. So honestly, tomorrow, it depends. If we just open up at 613, 612, we'll sell the puts. We'll instantly buy into a call. $20, whatever's $20, we'll buy it at opening price. So write this down. So we'll buy whatever is at $20 at opening price. If you're at 613 or 612, it doesn't matter what price you're at. After that, again, we're going to buy a call. $20. It's probably going to be for like a 620, 621, 622. We're going to hold it the whole entire day until you actually hit that price. If you don't hit it, we're going to sell it for a loss, or we're not going to pay attention to it, and we're just going to hop into a whole different play with a whole different amount, with a whole different idea, and we'll make sure we at least make back that capital that we lost for the previous trade. As long as we could just fix our mistakes that next day, technically, right, there was no mistake. Technically. As long as we could fix our mistake the next day. If you wait a week to fix it, all right. You waited some time. Maybe the market was in your favor. Maybe, you know what I mean? Things worked out a little bit better than normal. But like, imagine if you can have something go wrong and the next day you always just make it right because you're always just a little bit more motivated, right? And that's all I feel right now, especially with that first play right there. You just continue to head up higher, which makes sense. You're in a very bullish market. You still want to head up to 624. However, of course, it's always more fun to play the more dangerous side, the more dangerous idea, which is what we're doing with the 1 days. And it's just because of that gap right there. You might want to hold it. You might just want to go up to a new high, honestly, after you filled half of it. That's like a usual trend. Like if I show you any other gap that we made, like for instance right here, you would have gapped up all the way to the top here. You just filled half of it at the same time you gapped up. If you go to a whole nother time, you have a large gap here, but you only fill a quarter of it. So that's why I'm thinking like you might not just hold here and fall down to here. Or you know what it might do? It might gap inside of the gap just to pop up down here while it still has that gap, right? It might just gap inside of the gap. And then you might just open up right in the middle of them. The price action during the day might just be all over the place. And then again, you continue to head down lower. And then you gap at this next gap right here. If not, you fill the gap during the day. You just crash dramatically out the sky, $10. Because we have way too many gaps below us. Look at this. Just you tell me this is not insane. When I zoom out here. There's so many gaps that Weeble's program can't even show me more gaps. It runs out of gaps. Especially when you're on the 1 hour. Look at how crazy this is. Again, you have one gap right there, one gap right there, a large gap right here. Another gap right down here. And I'm pretty sure there's still more gaps here. I just got to go in the 15 minute. So you have two up there. That's 4, 3, 4, right? tiny one right there. I'm not going to count that as 5. So you have 5 gaps right now from the top to bottom, which means out of you running up 100 and whatever dollars it is, 100 and what is it at 418? So that's what, like 120, 140, something like that. So out of you running up $140, about, you could say $20 of that $40 is basically a gap, if not more, right? About like maybe $30 or $40, maybe like 30, like 32 out of $140 of a run up is just gaps. And it's terrible because you're not following a certain type of trend that you've been following since the 2000s. So you broke that in 2023. You almost resumed it when, you know, the tariffs crashed the market. You almost actually completed that trend that was necessary, but you still held, and the same time it took you to fall down, you ran right back up. Take, for example, if I go on the 4 hour, look at this right here. The same time you took to fall down, the same time you took to run right back up. I kid you not. So you did an equal reaction here, and you're just doing something greater than. However, like I told you, if you get below 613, which is very funny how there's a gap right there. If you get below this, you're just going to crash out the sky here. And you might fall right back down to the 560s. So that's the reason why I have everybody buying puts for right here. Is because that's the biggest gap right now. Point blank, simple. That's the biggest gap. I know we're going to want to at least magnet right back down on top of it. If not next to it, below it. So I know everybody's going to be profitable by that point. The only worry I have is, obviously, the market looks like it wants to run up higher. And how much higher can it go? Like I told you, 640. And then, of course, 680. And then 720. So those are the next areas where we're going to automatically buy the yearly puts. We already have it all planned out. So if it wants to run up that high, so be it. Once it gets above 624, we play puts automatically. It then drops down to 618 again, 617. Maybe it falls right back down to 613 to fill this gap. Let's just say if it continues going up higher tomorrow or tonight, so be it. The next thing we'll do is we'll play puts from, again, 624, 625. We'll buy the calls at 619, 618. If it continues to just fall, again, all you have to do in that moment is make sure you have enough puts for 613 so that you can at least claim whatever value you're going to be down on for the 617, 618s, because you're going to obviously be playing for a new high. Once you drop down to 618 from 624, you're going to be playing for this to, of course, go to the 630s. But at that point, you just might have to only sell out at like a very small gain. We might just have to take a step back and then be like, all right, let's see if it goes lower than 618. Because if it goes lower than 613, that's it. It's going to fall from the sky again. That's all that means. So we know what everything means. Keep it simple. Don't overthink it. If you fall underneath 613, you're falling from the sky straight down to 560s. That's the safest option. 560, 580. If you hold above 524 and that thing gets to 526, 527, 528, the first thing I would tell you is don't panic. During those days, I'll have calls that you can hop into. I could tell you now, of course, but I'd rather you just wait for it to happen and you just watch the live, because you can obviously understand what I think in the moment, and that's going to be more helpful, honestly, than me just telling you to write it down right now. But if it gets above 626, I would tell you to instantly hop into a 5-day call. Above 626, 5-day call for 530. So if you want, you can write that down. But like I said, when it happens, before you get into that, just make sure you're watching the live and you hear what I say that day. If you see it at 624, 626, before you get into it, again, ask me. You all have an opportunity to ask me, and I can all direct you, right? So I'm thinking we're still going to fall around 625, though. 624, 625. I'm thinking that's the level we're gonna hit before we fall. We're probably gonna fall maybe $10, $15. So I'm gonna make sure that everybody ends up being, very profitable with this, just to make back all those losses from the past couple days. Because we've been playing so many puts that I wouldn't be surprised if a lot of you have basically dealt with losing half of your capital just to the puts. I wouldn't doubt it. So in order to make this right, we got to make sure that everybody ends up being very profitable here. I want everybody to lock in their monthly calls, of course. But again, only when you get above 630, we're going to lock in some good monthly calls for the 640s, for the 634s. You might just run up $4, then reset right back down, just like the 620s. We'll see what the 620s do, because then we could, obviously see what we're going to do for 630. So again, this is a progression thing. I could tell you what I think is going to happen just due to historical, norms and percentages and possibilities, right? I could tell you what the possibility could be, but it's better for us to just wait for the week before, because I can actually tell you exactly what's going to happen. And the only reason why is because we used the previous weeks to tell what's going to happen the next week. So of course I'm going to need for some time to pass, right? So I think you all understand that. We're going to wait for the day of, and then I'll direct you on that day. I'll tell you exactly what puts to get into. All night tonight, honestly, I'm just going to be hunting this down. Because now, since this thing actually wanted to go up higher than 613, and last summer it didn't want to do that. It was very weak beforehand. Which, what I'm thinking is, last summer, what occurred was, you see how you consolidated right here, which was not too far below the previous high. What I'm thinking is, maybe because it was consolidating this much and it was building so much, momentum and so much volume here, it was able to just gap. You know what I mean? Just like spring up much higher, because it already created a nice little anchoring point. Remember, this is how I tell you how to trade a market. It runs up, anchors down, runs up, anchors down. But right here, as you could tell, there was no real anchor. Like it's very small and tiny compared to this anchor, And that's why I'm thinking you might actually have a bigger anchor just come right back down and hold somewhere over here. So we're just going to play for the top portion. Imagine like this, right? You have a giant box, and we're cutting it up into like 5 different pieces. And throughout that box, we're hopping into different entries. So that's the only way I would honestly be thinking about this. Just think about it like that. You're playing for the first couple boxes, and the second, couple boxes, and then the middle point, and then below that middle point, and then to the bottom point, and then you have a runner just in case this continues going down even lower. That's the only way to actually properly trade any market, truly, because that's the way it moves. It's by modules, by sections. So yeah, again, make sure you lock in some puts for 580, 560s. If you want to play it dangerous, just like how I am, I'm hopping into the 560s. If you want to play it very safe, just like how we're going to do on our paper account, I would tell you to hop into the 510s, not the 510s, but the 610s, 605s, maybe 599s, 598s. That's still a safe area, you could say. But yeah, I would just be very careful, of course. Only put in what you're willing to lose. And if you could buy a contract for December, which of course is very far, right? 170 days. But if you could buy a contract for December, honestly, it's not a stupid idea. As you could tell, the volume is and the open interest is extremely high for December for puts. It really does look like everybody's starting to bet this market's going to fall down lower. Take, for example, the 560s. There's 156,000 open interest, which is absolutely insane, right? If I just look at the calls here, let's see if anything matches up with that. 150,000. Let's see, 20,000. Yeah, I mean, you guys tell me. There's nothing for 150K here for the calls for open interest. So I'm telling you, they're loading up like crazy with these puts. 560 is most likely the easiest area. So that's the reason why they're playing that area, because is most likely going to go into profit and then hold and then bounce to 580. So if I'm this person, I'm probably going to offload these contracts the second I go into money, because look how much money I would make. My contracts would go from, how much money is this? $1,000 each to $2,000 each. So yeah, at that point, I would just sell out of everything and wait for it to bounce up to 580. And if I'm really put focused or bearish focused, and I think this market's going to go down lower, I don't believe in the Fed and I don't believe in none of that. Honestly, I don't blame you. I would say, you know what? Wait for it to bounce to 580 and then buy another put. If it bounces up higher, it's okay. Just play a 10-day call. You're going to get your money back. It's just you got to hold it. You got to wait. You got to hold it. You got to be patient. It doesn't matter what the hell the market's doing, because you're not going to understand it. As long as you understand the bigger trends, you'll understand the smaller ones. If you just keep paying attention to the 5 minute and to the 1 minute and to the 3 minute, you're never going to understand what this market's doing. So that's the reason why I built so many charts, because, you know, all of them focus on different time frames. Take, for example, this one right here. King's Point was done on the 1 hour. So when I look at it on the 1 hour like this, I can obviously tell that the point you just hit is right next to the top of this area. And last time you hit the top of that area, you fell below it, you ran up above it, fell below it again, you ran up to it, fell below it again, ran up to it, fell, ran up to it, fell, all the way down here. So if you run up to this line right here, which is 621, and of course it's going to keep increasing, right? Then it'll be 624, 625, which is on Thursday. So maybe we might even hit 625 Thursday, right? Just because this chart tells us. But if we do that and we do not get above this line, or we get somewhat above it and then just magnet to it, I would say maybe we should just play puts right back down to the midpoint, which is like 614. So I would say that's probably your safest bet right there. Is if this hits up here, 614 puts, 613 puts, and that's it. Call it a day. If it happens, it happens. If it doesn't, so be it. I'll have you get into better calls for us to play to the 630s, 640s, 650s, and we'll make that capital back. It's just, remember, you can't overdo it. Don't overdo it. I'm telling you, if you only have $100, don't get into no leap plays. Just paper trade it. Get into it with the paper account. It still counts. As long as you get into it with something, don't feel like you missed out. In fact, understand that that's going to actually help you get better. It's you not wanting to paper trade when you don't have the money. I'm telling you, it doesn't matter if you don't have the money. It's all right. Just paper trade, because it removes the anxiety behind these trades. You get really anxious. I'm telling you, this is like one of the most anxious and anxiety-inducing things in the world. The stress that this thing causes you to have, the loopholes and the overthinking, and no, yeah, that's very normal. That's what I'm saying. You got to find a way to mitigate everything and kind of treat everything like a robot type of thing, you know? Because once you introduce the emotions behind it, which are completely unnecessary, it's like you just start, it's like everything goes down the drain, you know? So, yeah, this chart tells me to wait. If I look at this chart here, I have no idea what the hell it's telling me. This one tells me next target above this is 618.04, which is so funny that we're still stuck on this damn line, which tells me that we're going to fall right back down to 611, if not the middle point, which is so funny because guess what's the middle point? The gap fill. I think we might actually fall here overnight. This might actually be a good one-day put. By the way, I didn't stop out. You think I sell out on anything? Come on, it's a true test. Tomorrow, now we have to see if we're going to make the money back for this. We have one more day, ladies and gentlemen. However, that was a really, really good selling point. It was only down $1. That was really good. Really good. As long as you guys listen to me, you didn't actually lose anything. Right now, I should be the only person down right now. That's exactly how this should work. Because, again, after a certain area, you should not hold a contract. That means any profit I get from this contract, you think I'm going to be like, whoop-dee, or I did it, or, you know, no. It was a test. So, meaning I held it longer than I normally should have, which means normally I would not be holding this right now. So anything that's gained from it, There's no emotion or feeling attached to it. It's a true test. Which is normally, like, I don't mention this, but I do that for 90% of the plays I cause you all to get into. Even if it's a paper trade, I kid you not, 90% of the time I'm still getting into it with my other accounts. That's, you know, how much belief I have in my trades, or at least my ideas. So it's good to be like that. I mean, sometimes it's not, of course. If you're just blasting through capital, you kind of want to, you know, mitigate it. You don't want to turn into a gambler, but you can, you know, obviously paper trade. And then after a whole week of paper trading, I mean, it's kind of like you just hop into the fast lane and you're able to take over and you're able to be profitable. It's almost like you're paper trading. It's the same thing. In fact, paper trading is harder if you haven't noticed. The fills on these things are terrible. Absolutely terrible. So it's kind of funny, but yeah, the paper trading is actually harder than, you know, trading with your real account, because again, the fills are not instant. The fills are like over an extended period of time, and by that point, the contract just changed $10, $20, you know? So yeah, it's kind of funny. But you could probably train yourself to be better and quicker with the actual account, because your fills are much quicker, especially when you're filling from market order. It's instant. I'm telling you, it's instant. I mean, depending on if you have like an old broker or a weird broker or something like that, then maybe it might be a little off. But not yet. So this is awesome, honestly. I want to see how this turns out tomorrow. I want to see if this damn thing fills at least 3/4 of the gap. If it opens up at 614, so be it. We'll take the loss, because we'll still be like $4 away, I think. Let me see. Let me check the prices on this real quick. How much would... And by the way, if you don't have a put right now, you could just buy one at open, as long as we don't fill this gap to the downside. If we open up at the same level, you actually have a head start. You could buy into a put cheaper than I will, because mine will be down. And you could try to see if it's just going to fill the gap. If it gets above reversal point number 1 tomorrow, which is going to be a little bit higher than today, probably, if you actually stay at the same level, we could just play the calls going up to number 2 and then 4. Give me 1 second, everybody. We might actually be really profitable on these tomorrow. 1, 2, 3, 35. That's gonna be up 50%. That's gonna be up 70% right there. So if this thing falls down to 614, right, which is $3, you could say, even if it doesn't happen overnight, let's just say it happens during the day tomorrow. If you guys could scoop up some 610s, you could probably end up going up, like 50% easy. Again, don't put too much money in this. Don't be a psychopath or a lunatic. It's not time for that right now, you know? Just one contract. You're trying to turn nothing. You're trying to turn some pebbles and some rocks into some diamonds. And the only way to do that is to start with a very low amount that's very safe. It's going to be you have to be very patient. So it's going to be very annoying, honestly. You might have to wait in this option for like an hour. before things play out. Kind of like today. You see how if you hopped into those calls and you just ran away from your computer, you just ran down the block or something, you came back and you were up, what, 100%, 200%? Let's look at the calls real quick for 0 days. Remember, I told you to hop into a certain call that was $20. So let's see what call actually hit $20 because this is absurd. I can't even believe this. That's ridiculous right there. Even the 617s. Look at this option right here. So if you got, oh my God, 2 days in a row, I'm going to lose it. I'm going to lose it. 2 days in a row, the one option I gave you guys, and I pointed out specifically, I specifically said 618 and 617s, which is kind of funny. I said if the 617s, by the time we fall down to reversal point number 3, if they're $30, or if they're $40, we're going to buy it. That's what I told you guys. Even if they're $40, we're going to buy it. And look at the price on that. That thing dropped down. Again, $40 right here. So everybody would have scooped it up for this price. And look at the price that it hit after. That's basically 1,000% right there. Which I don't know if you remember yesterday's video, which is on Friday. It did the same thing. The one option I gave you guys ended up going 1,000%. So if, let's just say half of you in this Discord did not get that at least 500% gain while I was in the background, just, doing stuff and getting stuff done. I just want you to understand that, again, that was 2 days in a row. I'm not going to tell you how to feel, but I'm just going to tell you, if you didn't get that, we're going to have a one-on-one tonight. Just so you can understand why I specifically called out reversal point number 3 and why I told you it was going to run up from there, as well as when you mix it in with the CS zones, which is a little bit all over the place, I guess. But, I mean, you understood what I was saying. I told you guys, since it never hit the top, it looked like it wants to go up here at least once. That was it. Point blank simple. So if you were buying at number 3, you're waiting for it to at least hit the top of this box or a little bit higher. And it actually went ridiculous. They went straight up to the next blue line. And you see how I got sold off from that blue line? That's the reason why I use these as an uptrend. Because they always tell me whether or not a market has momentum or not. Take, for example, yesterday you held on the blue line after you just came from hitting a blue line. Correct, everybody? Look at the day beforehand. You opened up at the blue line and you ran to the blue line. Look at the day beforehand, right? You fell from the blue line to the halfway point of this next blue line. If you keep going back here, once again, you opened up, fell right on top of the blue line, ran to the blue line, and fell down from the blue line. So it's really weird how these things work, but they always work. They've been working since last year, and I've been copying and pasting them delicately so that they could still work till now. And I probably have to check them again just to make sure that everything is precise. It takes a couple hours, so we'll see if everything's precise, but yeah, we might get the shutdown. As long as this thing stays within the orange line after hours, which I'll have it on the screen if you guys want to watch this for a couple minutes after. I'm going to go take care of something. But if it holds this price after hours, you could probably get a short on futures if you want. If it goes above it and you're playing futures, you could probably go long, honestly. But just be careful. Be very careful. Big moves. So only put like $500, $50 in your futures account. You can actually trade futures with up to $70 if you're using Tradovate. So if you guys want to still trade after hours up to 8 o'clock, you could still gain that extra experience. It's around $80. Just expect to lose everything one trade. I'm just letting you know. If you get margin call, that's it. So you have to be very delicate with it. You have to make sure you're scalping and make sure you get out when you're supposed to. It's not about holding for that extra run. None of that matters with futures. You just got to scalp, scalp, scalp. That's the safest way. Unless the market is open, then you could just basically copy my SPY trades. But remember, the futures market moves a little bit ahead of SPY. It moves about 15 minutes. I mean, honestly, real-time data, I feel like real-time data might be the same. We got to compare it. We should compare it tomorrow. We'll compare it tomorrow on Tradovate. and then we'll make sure that the futures is moving at the same speed as SPY. If it feels like there's a future trend that develops, which is from the ES, and it happens first on Tradovate, I kid you not, I'm going to buy the live market data on TradingView, and then we're just going to start using ES charts to trade SPY. Truly. Because that might work better in our favor. So we'll see what's the best way to trade. Remember, we're always learning. We're always getting better. And that's the one thing we're willing to do, is never say that, you know, whatever level we're at is the absolute top. We'll say it's the best, honestly. Because who puts as much time into this as we do? Especially trying to actually, you know, transcribe the language that this market actually reads in and trends in. It's such a hard thing to do, you know, because nobody does it properly. They all do it surface level. They all try to make videos that catch and videos that sound good, even though none of them know exactly what they're talking about, nor are they consistent. You can even take fair value gaps. Like, so many people talk about fair value gaps, and it was like this new thing that just blew up out of nowhere. But yet the same people that talk about those same fair value gaps, when I ask them what they think the market's going to do next week, next month, they have no idea. So it's, I don't know, it's like forcing a person to be able to trade in a certain manner where they're limited. It sounds intentional. It sounds like a cage. It sounds like, you know what I mean? It doesn't really sound right. So at least the way we teach and we show you how to trade is not going to cage you down upon a certain type of trading style, because then you're always going to know what the market's doing. Even, for instance, like right now, we talked about 618 since January. Like, that was a long time ago, you know? Like a really long time ago. Take, for example, let me show you a tweet that I have on my Twitter from January. Let me show you something funny real quick. It should still be the pinned tweet, I think. Let me see. This is why I told everybody. I don't even know how to go here. How do you use this? Okay, no, I put a new pin tweet. Oh man, so I gotta find it. I think I posted it in the Discord. Let me see. Give me 1 second. But again, this is very important. I'm not trying to showboat. I'm not trying to say any, you know, sound like I'm better than I am. I just want to be able to make you understand that everything the market's doing is something we've already talked about months ago. Where is it? Right here? SPY leaps? No. It was before that. No. I have no idea. Let me see something real quick. Is it down here? Sometimes I be throwing stuff in the... I'm happy I don't actually delete none of the channels that were once on this Discord. It's just all just like in the corner. Is this it? April 1st? No, February. Nah, that's way before. Alright, listen, I have no idea what the hell I put it. Oh, wait, I found it. Alrighty. Alright, so look at this right here. What does this say? This says on January 29th, SPY was going to hit 593 first and then 624 by May. That's the current idea. I said 585 and then 634 by May. That's the middle idea. And then for the basic idea, which was, I mean, not really the basic idea, but the extreme idea, I guess, I said SPY was going to hit 565 and then 643. So these levels here that I've written, as you could tell, they're still the same levels that I'm talking about now. 624, 634, 643. The only difference is this is the basic post. I'm pretty sure everybody could read that in fine print, right? Which means, what do you think the advanced posts look like? And that's the thing. I posted that to Patreon, which I'm not going to show now. Actually, no. Yeah, I'm not going to do it right now. We'll probably make another video later today and we'll go over it. This video is already too long. But if I show you the advanced posts, which I can actually show you on the chart, I'll show you this much right now. Let's find it. Should be this chart here. You gotta go to the 1 hour. And then after that, again, I'm gonna take a little break here. I'm gonna go grab something to eat, and then we'll talk about this stuff after. I want everybody to kind of have the one-on-ones, so I'm gonna start calling you right after. I'll text you, of course, first, just to make sure you're free, and then we'll go from there. Alrighty, ladies and gentlemen, let me just show you this real quick. So this was from April 11th, 2025. So where was the one from January? This is from January. So as you can see from January, if you follow this going straight down, you would see that every single level that I called out here was a level that the market reacted to. I even tell you that since this is falling so far from the top, that contracts a couple months out are going to be so cheap, you can actually start buying into them, which is around the 560s, which is what we did. If you keep reading it in fine print, again, it says all the way down to what number, everybody? Where is it? What number is it? 540. Oh, 480. So as you can see, a post that I had in January, this was the advanced post. We were literally correct about the number a market hit months prior, which is extraordinary. It's way out of the norm than I think everybody's honestly understanding right now. I want you to understand this. We called out the market hitting that level in January. And if you think I fixed this post or something like that, go look at the Patreon and go look at the Discord. Because this right here, if you look at this exact name and you copy and paste it into the Discord or the Patreon, you're going to find this exact same post here from back then. And then this was the one from November, but it doesn't look as good, of course. That's the reason why I don't talk about it. But I think we even have, what numbers do we have here? Let me see. 555. Which is kind of funny because 555, if I go to the chart here on SPY, where does SPY hit before it actually runs up higher? Exactly, right? So it's kind of funny, but the first level SPY ever hits, even during the Trump tariffs, during the worst time to trade, the most impossible time to trade, a post that I had in November ended up being your one recipe for basically success here. And again, November is all the way over here. So I want you guys to kind of be aware of this stuff. As long as you have your charts updated and you're always looking at it in different ways, which I could show you how to do during the one-on-ones, you're always going to be ready for whatever the market can do, such as if it runs up higher and how to play it. Remember, we talked about 628 a lot. So you might actually fall from 628 instead of 624. So that'll be really interesting for tomorrow to see. But now, yeah, let's go back to this chart over here. We're going to leave it like this, just in case you guys want to do some futures trades. Remember, there's a gap down here. And yes, give me a few, everybody.
the rest of the damage. So I'm
That rear quarter as well, that one's a lot worse than the other side.
That's gone, innit? This is disappointing, because I almost had my heart set on this M4 CS. But if I was going to buy it, it needed to be extremely cheap. And at the minute, this thing's listed for £18,000. But online, it was quite tricky to see the rest of the damage. So I'm glad we've come up to see it. But there's still a possibility if we can get it cheaper than that 18 grand. To replace this rear quarter, we're going to have to, I would say, probably join it here. And then if we join it there, we're going to have the windscreen out. We're going to have that screen out. This is a big job.
Surely the back end's okay. Oh.
Oh. Oh.
You see it more and more in the media, where you see girls who look like me, who are...
Every part, even the exhaust, you'd have to replace the exhaust.
Oh, is the exhaust damaged as well? Yeah. Somehow, there's even damage to the rear bumper. The F80 is nice. It's got different rear lights.
Yeah, so they've got these like flowered effects almost, like layered. They're really expensive.
And this is standard, isn't it?
Yeah, standard.
This is standard. Carbon roof standard.
Also, the interior should all be carbon as well.
Oh, look at this.
Yeah, look at door cards. Like
what's that? It's like recycled plastic.
Yeah.
What is that?
It's carbon fibre.
Is that carbon fibre?
Well, they'll call it that, but it's just...
No, that looks like...
fiberglass, doesn't it?
Yeah, it looks like plastic or something. Yeah, I remember how these drive. Like, my old M4 was sick. No airbags gone, even though it's had that massive front end crash. Yeah. All Alcantara CS.
Carbon fibre in the centre. The interior's nice.
Yeah, the interior is really nice. 18 grand for this.
I don't think that's too bad, but at the same time it needs a lot of work. Oh, look at that wheel.
Yeah, this has gone in, innit? Oh. If I'm honest with you guys as well, if it was going to come for one car, this was the one car I'd come up for. But there is other cars around here. But now I'm a bit disappointed. So maybe this M4 is looking like too much work. But I've not come here not to buy something. And there's plenty of cars left. Audi R8. Liam wanted the yellow one. And actually this one was listed at Copart. And what these guys do, I think if they get a really good deal, they buy them from Copart and then relist them on eBay. And then people like us buy them and try and fix them. This is R8. Thing I don't like, soft top.
I think Liam would like that though.
What, with his nice hairline?
Yeah, he doesn't have the best hairline for it, but I think he'd like because he can hear the sound, can't he?
So what's up with this? Can't work out what's happened at the back there. Both lights are smashed, rear quarters perished here, but we know they bolt on, bolt off now because we've done that before. But everyone's seen an R8 on the Mark II channel, haven't they? We've done it.
This one though, the front end has got structural damage as well.
Yeah, the front end.
All this here is bent in.
That looks like it's twisted as well. That looks like it's twisted. Oh yeah, yeah. Look, you can see the leg there.
Oh yeah, look.
Do you know what? I think the good thing about a place like this, rather than Copart you buy them blind. That M4, I probably would have bought that at Copart auction off because I couldn't see the damage on the door or anything. Now I've seen it in real life. Yeah.
How much is this one for sale?
Oh yeah, that's a good 42,000. Cheaper than Liam's.
It is the slightly older model though as well.
Oh,
it's not the facelift.
Yeah, and it's convertible. I think in the convertible, less desirable. Not for me.
This looks a bit like for you though. This is a...
Yeah, I like RS7.
Similar. Oh, that wheel's like a wide body.
I think we found out how he crashed.
Look at that.
Oh my days. This could be a possibility as well. This was on the possibility list. An Audi RS7. We did the RS6. It's got similar damage to the RS6, but then I've just noticed damage at the rear. What's happened here?
Oh, look at the wheel.
Oh my God.
Massive chunks taken out.
What has happened there? Okay, there's the bottom arm. That's broken right there. I can't see whether it's got any suspension on here. It doesn't look like it.
Oh yeah.
They're on airbags, but it looks like the airbags fell out. But this looks quite nice. The Audi RS7. Now this could be a possibility. From the outside, it looks quite an easy repair, but we have already done an Audi RS6 before.
I think they look so cool. Like they do look sick.
Looks sick, doesn't it? Same engine as RS6. We know how good they are.
What, is the interior the same?
Yeah, it's exactly the same as my RS6. Everything's the same. It's got less of a pan roof. Let's have a look at this front damage because That back damage is repairable. That's a few suspension arms, bit of suspension, 300, 400 quid for that, I reckon, in the back. Got some chassis damage and some serious wiring issues as well. Oh, what's all this? Oh, that's the wheel.
That's the wheel.
That's the wheel. That was the wheel. Oh, we've got a lot of broken wires. This is bad, and that is all aluminium. These are all rivets. So this isn't actually welded. This is all glued and riveted. How much of this do we have to buy?
Well, this is still lifted up here.
This is part of the steering. that's the track control arm.
Right.
It's quite bad. Oh, this is quite difficult. To be fair,
Another car with chassis damage, but this one different to the M4 because this is aluminium rather than steel we're dealing with.
it is quite difficult. Like when you look at them, they're a lot worse than what they look like online.
And how much is this one?
19.
19,000. That's pretty good, I would say, as well.
Category S, 19, 2016 model, 28,000 miles. It's going to be worth 30,
30, 40, yeah.
30, yeah.
Depending on the spec, I guess.
So we need a bonnet, and we'd need this from Audi. A headlight, that's where a lot of the money's going to be in, isn't it? I think we're going to put this in the maybe pile. This is in the maybe pile. It's good. It's a repair we've not really done before with that chassis thing on an Audi anyway, but it's a nice car. It's not bad. What else have we got in here? Have we got any more possibilities we've got in here?
I can see a car down here that's a bit of you, I think.
This Bentley, I had a look online before I come in, it said previous repair. Grill's missing.
A little bit of a crack in the bumper.
Could drive this home. This has been, looks like it could have been stolen.
Oh, I think they've smashed the locks off it.
Yeah, look. This could have been stolen.
It's
Do
just
you
a
know
door
when it
code.
says previous repair?
Yeah.
This is full of filler. Come and have a look at this arch. I don't know if people
Oh
can
yeah,
see.
it's like all like written.
Yeah, it's not. Look, they've had to like, look at all this. These body lines don't line up. And look at that ain't even a perfect circle, look.
But that's something the body shop could sort out.
Yeah, but it depends how bad it is underneath. Like how much filler is under that. Like, I can see the filler marks. Oh my god! Look at you can see how thick the filler is under there. Can you have a look in under here?
Oh yeah.
Look how thick the filler is.
Oh yeah, that's not good.
Someone's fixed this. No one's bought it, so they thought, let's try and sell it as a crash car again. Oh my god, Matthew! Look at all this.
What, Matthew?
Look at all that in there. Look at all that filler and glue and. Oh my god. We're buying somebody else's headache here. This has been absolutely bodged together. Oh, there's just filler everywhere, all in this side. Oh dear. Like after a while, we're driving that round. This will all sink in. It'll look all wavy. Such a shame. We've come to Bolton. It's quite far away. We want a deal. Ooh. Ooh. What's this?
I think it's a Porsche Cayman with a wing.
Oh, it says Cayman. This is what got me into Porsches.
Yeah, it was.
My Cayman S got me into Porsches. All the Japanese fans were going crazy about the S2000.
Today is history making because we like to step out once in a while and change the industry again. The most exhaustive network test.
Don't know why. I want the M4, but I don't want the headache of repairing the M4. But I really like the M4.
So now, it's time to make a decision. Which car are we going to go home with? If any.
Look at his face.
He really wants to do it. I really like. It's such a shame it's got that much down. I'm just thinking of like, right, I'm going to be in the unit late, drilling out this quarter. Oh, I don't know. I might need to flip a coin. The RS7, my mind's gone off that one.
You're out.
Yeah, I'm out. Got an RS6.
Shall we flip a coin for the M4?
I think we might need to flip a coin. The M4. Have we got a coin? I don't have a coin. Do you know what we could do with it though? Just have a quick look whilst I'm here at car vertical bit, just to see, be able to tell us how many owners it's had and everything, and when it got crashed. Let's see how many previous owners it's had.
How many do you reckon? High amount or low?
6.
6.
I'm going to say 6. 2018, 7 years old. The last owner didn't take much care of it. Oh, interesting. So mileage, quite low. So the last recorded miles was 24,000 miles. And how many miles does this say?
30,000 now.
30,000. So that's saying, Car Vertical saying that's quite low mileage for this car. Average is around 40,000 for this car. It's been category S 2025 in February.
Oh yeah, so about 3-4 months ago.
Not long ago. So he's lost it in February. 2 owners.
Is that it?
Only had 2 owners, this car. So it might have been really well looked after until he's had a smash. Eventually as well, you might actually see the photos of this car appear on the Car Vertical check as well. So if anyone does buy this in the future, you'll be able to see the car on this check so you know exactly where the damage was if it ever got repaired. You can check your car out, find the history of your car with the link in the description and the code Mark2 for the Mark2 channel if you want to find out some info on your car. But that was quite interesting. 2 owners, low mileage as well. He's had it for a long time and not really drove it much, but when he did, it ended up like this.
So what Matt said to me is, in these situations where you have to flip a coin, you flip it, and while it's in the air, what you want it to land on is what you should do, not what the coin says.
Yeah,
So
that's
if
it.
you're in the air and it says, I'm going to buy it, and I want to buy it, then you buy it.
Yeah. Heads I buy it, tails I don't buy it.
What is it?
It landed on the head.
But what did you think when it was in the air?
I didn't want to buy it.
Okay, we won't buy it. Should we
Yeah.
go look at something else?
I think we have to look at something else.
My heart just wasn't in it. Something just didn't feel right with this M4. It needed a lot of work for the price. But despite that, I still had an itch for a new project to build on this Mark II channel. So I went away and found something else.
Okay, the M4 was a no-go, the RS7 was a no-go, the R8 was a no-go, but I bought something, and I've used the whole £50,000 budget because it was absolutely spot on £50,000. But I'm excited for this because it's not a Lamborghini, it's not a Ferrari, it's not a Porsche, it's not a Rolls Royce.
Have we done one before?
No,
No.
not done one of these ones before. This is going to be good. But I have used the full budget, but I'm excited for it. But I have made a little mistake with it as well, which I didn't realise. Let me show you it. I think I've made a good decision because I think it's a bargain. Here it is.
Is that a Mercedes?
An AMG, baby. A Mercedes AMG GT63S. And we'll speak later about the E-bit.
What do you think of his new purchase?
It's nice.
Yeah?
Nice, yeah. It's an AGM engine, isn't it? Same as the other car that we're doing.
Do you mean AMG?
AMG, yeah.
There's a few things I didn't know about before I bought it, and this is the difference between going to a place where we could actually look around the cars and then buying from Copart. When you buy from Copart, you buy blind, you buy off the photos. I would have bought that M4 if we didn't go and see it. Here's my new car. AMG GT63S is what I thought I bought. Turns out this is an AMG GT63S E Performance. Because of that, I may have got a bargain because apparently these from new were £173,000. I just bought this for £50,000. Now I thought I bought a AMG GT63S, but because of the E it makes it more expensive, but it also has a risk of electric shock, and it also, look at this, what is that?
Is that where you plug it in?
That's where you plug it in, look.
Why have they put it there?
That is disgustingly ugly.
Why is he brought in the hybrid as well?
Can't we just get rid of the E bit? We can cut it off the front badge and pretend it ain't an E.
I didn't mean to buy an E. Like, I thought it was just a good priced AMG GT63S, but that's horrendous, that thing. So, because it's an E, it's got 800 and... how much horsepower? 831 horsepower and 1,047 foot-pounds of torque.
Oh my
It's the fastest
quick.
It's quick.
GT. Yeah, this is going to be rapid.
No wonder it's crashed.
Like, bearing in mind my M5, how fast that was 700 horsepower. This one's 830 horsepower.
I bet this is heavy though.
Yeah, 2.2 ton.
It's like a Rolls Royce weight.
Yeah, it is proper heavy. Now, another thing, this car is basically brand new. It's still got all the stickers on, the AMG stickers on, and if I remember, it's not done many miles. Also, this interior is absolutely sick. We've got cooled seat, heated seat, memory seat, all these buttons on the steering wheel, all these buttons on the steering wheel. I love buttons on steering wheels. And then, look, there's all touch pads and classic Mercedes.
How did you change the climate control?
Oh, look, they did well, look. Climate control changed with buttons. They didn't think to do it touchscreen. Got double pan roof, sunroof there, sunroof there.
Bit of carbon fibre. Who always loves a bit of carbon fibre.
Loads of carbon fibre. It's actually a really nice car, but the good thing as well is even though it's a hybrid, the airbags haven't popped. So because the airbags haven't popped, we shouldn't have to deal with any pyro fuses inside the hybrid battery, wherever that may be, which is probably in the boot. Actually, we haven't opened the boot, have we?
What do you think of it?
I think it's quite an aggressive looking car.
It looks cool, doesn't it?
Yeah, I do. It does look cool.
Minus the...
Well, it'll look cool when it's done.
Yeah, the crash.
Look at this. V8, twin turbo. That's what I like. But, look, our favourite little hybrid battery thing that was in the Revolto. But we know all about hybrids now, so we don't need to worry about that. Let's put some things to it. There is a risk I've took with this car. There is a risk. You might have seen it on the windscreen. It says, don't start.
Where does it say that?
Slightly worrying.
Oh, yeah.
Don't start. Now, I think it says that because there's an oil cooler here missing. So all of this had oil in it. And the worrying thing is, on Copilot, it says, does start. So they've started it.
And then go, definitely.
And then turned it off. Yeah, and then gone. The thing is with Copilot, they'll say if it doesn't, they're not going to say it does start but knocks. It just does start or not. But I really like the look of the car. Like it looks really boaty, but it's like proper stealth, innit? It's been wrapped gloss black underneath.
I like the satin black.
Yeah, I do like the satin black, but the issue is because we've got this damage here to the quarter, which I think we will be able to get out. This is going to need pulling out and painting. And then if we pull it out and paint it, I'm going to need to peel the wrap off. And I don't know the brand of this wrap, so we'll never be able to match up this colour wrap to anything else. But I do like it satin black.
Do you know the guy that wrapped it?
Yeah.
He might message you when he watched the video.
He might. Because do you know all these door handles? They're chrome, and that would look minging.
Don't like chrome, do you?
That would look disgusting on this car. It's supposed to be blacked out and stealth. 5, 4, 3, 2, 1, action. We've got power, baby. First off, I want to see the mileage. 4,100 miles in this.
Is that classed as brand new?
Yeah, that's brand new, isn't it?
Brand new?
Yeah.
Lowe's knows messes are a part of life, so cleaning them up should be simple. The Maytag High Efficiency Smart Washer was designed to take on even...
Not run in yet, is it?
No.
Oh my god, the seating position. Yeah, Mercedes were always on it with like technology, weren't they? But it doesn't age very well. For £50,000, it is expensive. It is expensive. I know we wanted to get a cheaper car, but for £50,000, this is, I think, is an absolute bargain. It's brand new. What have we got? Charging cable.
It's never been used by the looks of it.
It's not been used. It's all in this bag. What's in the bag?
Nothing.
Oh, no.
How are we going to charge
It's just a
it?
lunchbox. Oh, locking wheel nuts. Yes. They're all there, look. This is brand new.
I have noticed something else.
What have we noticed?
The tyres that are on it are Michelin Pilot Sport 4S's. And
4S's as
we
well.
very rarely get a crash car in here with Michelin's on.
Yeah, how has this done? How has it done that? Oh, there's a small dent here. Bit of PDR. Now the main issue with all of this, we'll get to the damage which is on the front right, which we've seen, which was visual. But I'm just worried about the don't start situation. What I want to do, and I want to make sure for myself, is we need to have a look at this front bumper. This engine's in loads of different AMGs, so all these radiator packs are not going to be that expensive because the oil coolers are going to be the same off like all the cars which have got that same engine. All this suspension, I mean, that's pretty bad.
Left the chat.
Yeah, it has left the chat and there is a bit of chassis damage. Yeah, let's just have a quick look at that before we attempt to try and start this in, because I need to see if we start it, if we can add some oil in it, because if the engine's gone, then we are well and truly cooked, because this engine ain't going to be cheap. Right, get it in the air. Yes! That's how we do it. If there's a locking wheel nut under this, I'll be shocked. Yeah, the Mercedes... Have you ever seen that?
What? Are they all like a special tool?
What tool is that?
Is that in that locking wheel nut?
This is just so... Like, this is Gen Z cars for you, innit? Just do it different for no reason. That is so Gen Z. So not only have they got a cap on, which is really hard to get off anyway, and no one steals wheels nowadays, they put a locking cap and then also flower nuts. What the hell are they?
They look really pretty.
How do you get them out? They're the flower nuts.
What, and there's no tool to get them off?
What? They've just reinvented the nut. What was wrong with a 17 mil? So look, we've got the locking nut. Can we just stay away from electric cars now? Yeet. Right, locking wheel nuts off. Oh yeah. A 17 does go on them.
So they just made them look pretty?
We're moving with the times. That's well light.
It's got carbon ceramics.
Oh, it's got carbon ceramics. They're massive. But it is 2.3 tonne.
You need them.
So it does need it. Okay, that looks bad. We'll get to that. Let me lift it up and I'll show you. Subframe. How's the subframe looking? I'm going to give it an 8 out of 10. Let's start off with the not so bad until it gets to the bad.
Okay.
Okay, so not so bad. Front arm broken. It's good that that's broken here, because if it wasn't broken, it could have broke the subframe. Then that means we'd have to drop the old engine or hold the engine up to change the subframe. Good. Well, not, yeah, better than bad. Drive shaft. Drive shaft is ripped out, which is better than being pushed in, I guess, isn't it? It's ripped out.
Okay.
Yeah? Not bad. Okay? We just replace all of this, apart from the disc.
Oh no.
Has it got a crack in it?
Let's have a look.
Let's see it the other way.
Oh! That goes down the other side.
You're joking.
Can you see it?
Do you know how you said this was a bargain?
But you were saying it gets worse than that.
Yeah, it's gonna get worse. How much do you reckon one of these discs are?
£6.5 grand. 6,855 euros.
Surely there's someone who can replace that.
I want to see how it gets possibly worse than that.
Okay, right, here we go. So, this wheel, because it disconnected itself and gone back, it's damaged the frame here. So, like, this frame is all dented and pulled away here. Now, the good thing is that you can buy this frame in all sections. It's squashed up here. So I think if we can buy that section and put that section in, which I think we'll be able to do, it's similar to the Porsche GT3, but the bit I was worried about when I've just seen this is subframes here. Remember when we looked at the BMW and we seen the strut brace which had moved, and that was the key to saying that like something on the chassis moved. Well, look at this. This arm here is all bent down. Now, I don't know whether that's bent down because the wheel has hit it and pulled it down, which I think is why it's done that. The scary thing is if we put we'll be able to see whether that's actually straight or not. If when we get another bar, if it doesn't line up from the chassis into there, then we know we've got an issue. Or we can literally just measure this side. The bar's actually underneath here. We have to measure this side here and make sure it lines up there to there. But what do you reckon?
Everyone's keeping the fingers crossed,
Yeah.
including us.
We've discovered a cracked disc chassis damage.
Yeah.
I think it's now time for the big moment to see if it starts.
Yeah, if it don't start, what we're doing with it? Back through Copart?
Yeah, I think we'll take 45 for it.
Yeah. So all of these are coolers. I think these just hold water. And then this is our main issue here. So these hold the oil in, and look, actually with a bit of... Oh, dog! It's got a bit of oil in it, which is good news. What we need to do is we need to make a fake oil cooler. So we need to bridge that one to that one, so then put a bit of oil in, we start it, and then if this engine runs nicely and it doesn't sound like an absolute choo-choo train, we should be all right. It says on the dash, no oil.
Okay. Have you done this before?
The last time I did this was on a Mercedes.
The C63?
The C63. Oh, everyone probably asked about that, and we're on the second channel, so we can talk about the C63. The C63 is going to be coming back soon. It's having a freshen up. Might look a little bit like there.
Where were you today when we were looking at cars?
I was at the MotoGP.
Yeah?
Thanks to Beta Tools and the Moto3 team who hosted me.
Did they win?
Shady Rays sunglasses. Break them or lose them. We'll replace them. Easy as that.
Kyle's gonna need new Shady Rays Titan.
Let's get him another pair, fast.
How you doing? Doing good, how about you? Hi.
Shady Rays. Eyewear that has your back.
The best mattress deals so you can get your best sleep. Only during the 4th of July mattress sale at Raymore and Flanagan. Save hundreds on top brands. Get $500 off Tempur-Pedic Breeze and more. Don't miss 4th of July mattress deals at Raymore and Flanagan.
They didn't, but never mind. It's still a good day for me.
We've got our customised silicone hose.
This is nothing to do with me, by the way. This is a Matt Armstrong idea.
This is what you call pit stop Aruna.
But you know what?
What, you reckon it'll just go on that?
That fits nice on there, doesn't it?
This is a big moment here, because this is going to decide whether we've got a carbon ceramic disc broken and an engine broken. I'm excited for this car though, like it's a proper cruiser, isn't it? Oh, my HWBT socks. Look at that. Gas, clutch, but in this case, gas brake.
What's your predictions? Do you think it's going to run sweet or?
I think Mercedes engines are really good. Like, Mercedes engines tend to be bulletproof. I don't really know anyone who's actually complained about a Mercedes engine. And you know, all the taxis in like Germany, all over the world, a lot of them are Mercedes, and they always have 9,000 million miles on the clock because the engines are really good. The only things that go wrong with Mercedes are generally like electrical stuff.
What, like a hybrid system?
Oh yeah. Right, that's cranked up like Soldier Boy in 2016.
What do you think of Mercedes, Tony?
Yeah, Mercedes engines are great, but I always remember a lad that used to have a Mercedes, and he always used to come in saying he's got electrical faults.
Yeah, it's always electrical stuff on Max, yeah. It is going to be really heavy, the car is, isn't it? But the thing is with this, I think it knows what it wants to be. It wants to be a cruiser, a luxury cruiser with a bit of power like the M5, whereas like the Revolto didn't know what it wanted to be, does it? It just doesn't know. Right. I don't know how much it's lost. It doesn't have a dipstick because, again, Gen Z. Put Valvoline in. I got my Valvoline top today. Please let this work. I thought I was doing one. Like, I wanted a car for the second channel which wasn't going to be, like, a real big build. We saved the main big builds for the main channel, and this was going to be a nice little easy repair, and I could enjoy this car as well. I think this car's a nice car, but this is going to be a difference now between having a big car on the main channel to rebuild, which we'll release next week, and then also another headache on the second channel. But I mean, it'd be fun building one of these engines, but you'll see why I won't want to build one next week as well. This should start. It says on Copilot it starts. Shout me if oil starts coming out, and also if it sounds like a bag of nails, I'm turning it off. Are we ready? Oh, we ready? Oh, look at this. Sport Plus.
We need to see if it starts
What, are you
first.
finding more switches?
Yeah, we need to see if it starts first. It's put it in sport mode.
He's playing with the switches already.
Right, I'm gonna do it. I'm gonna do it. Are you ready? 3. I'm scared. 2, 1.
That sounded terrible. Do it one more time.
You've got to start it, Matt.
That didn't sound good, did it?
No.
Oh no. Oh, that didn't sound good.
We had this with the SVR though. We did start it and it sounded like a bag of nails, and then we ran it again. It sounded sweet.
That sounded like it had nails in the engine. Right, so just let it start.
Let's let it start and let it cycle the oil.
You reckon it's got enough oil in that?
You want to put some more in?
Sounded so bad.
Sounded a bit like the SVR.
Okay, we ready?
Yep.
Was that working or not?
It's sort of.
Is that how quiet are these engines?
Oh no, they would be as smooth as a dime.
Not
I
the
reckon.
DP12. Like, you can't hear it.
Oh. I could hear it.
We got to rebuild an engine.
Oh no, please, no. It could be because the battery power's low. We had that with the SVR. The SVR, when we started the SVR up, it ran really bad until we had full good battery on it, didn't we? And like this, look, as soon as I turn this off, this battery's dead. So it could be the battery power. Oh, there's no way we're going to take this engine out. No way. No.
We're going to have to.
No, there's no way.
The viewers don't know why you don't want to take this engine out. So they're thinking, why don't you want to take it out? It all makes sense though.
It was all going to make sense. Have you put the oil pipe back on? Oh my God, what the hell is going on there? One more time. And you shouldn't say that in BMXing, but I need to know. We all need to know. You need to know, I need to know. I need to see why is that on the floor like that? Oil pipe back on. A lot of oil everywhere. Let's try again. That sounds good.
Little bit of a rev.
Yeah? Yes! That sounded better.
Until you revved it.
And then I revved it and then it didn't sound good, did it?
It's going to work, come on.
Oh, do we need some more oil? Yeah, that sounds good. What's that? Why does it sound like top end knock?
Yeah, it's topping at knock end.
Topping at knock end?
Knocking at the top end. Knocking at the top end. Yeah.
But why did it sound good a minute ago? Has it got no oil in it at all? I don't think there's any oil in it. Don't sound like a... Like when your engine's gone, it sounds like it all the time. I think put some more in, that made it better.
You know what's happened to this? He's crashed it and it stayed running because the airbags haven't gone off.
Oh yeah. Yeah, it's crashed it and it stayed running.
And it stayed running.
Then there would have been... But it still had oil in it though, so it can't have pumped out all the oil.
No. But that's probably why we're having to put so much in, because it's pumped a lot out.
Right, okay, go on then. Come on. Just keep going till the engine's fixed. Sounds good. That sounds good. Yeah, go on. Yeah, that sounds good. That sounds good. That sounds alright. That does sound good. I think the engine's alright. What do you think?
I think it is, yeah. I think it's mechanic. It'll be alright. Now it's got some oil in.
That sounded loads better then. The more I think it was absolutely ridden of oil. It's not done it good, but Mercedes make good engines that don't need oil. But when you add Valvoline, it does work. I think we might be okay on that front. We might be okay, minus the disc, minus the chassis damage. Have we got a bargain? let me know. I guess in the next video, we're going to get this back on the road and repaired. In the main channel video, we're going to be releasing a new car. It is exciting. Thanks so much for watching this one. I think we got a good Merc here. See you in the next video. Peace out.
Lowe's knows when you need a new appliance, you need it fast. So we offer delivery as soon as next day. We also offer installation and we'll haul away your old one. When you need it fast, we've got you covered. Shop Lowe's today. We help, you save.
We pretty much take it all. Fridges and dishwashers, dressers, drawers, couches, mattresses, bed frames, concrete, things like that. Same day notice or 3 weeks in advance.
That's what you get when you hire professionals. It's good to know you're making a difference. We found some paper and cardboard out of the job and we sort through it. Instead of just throwing this stuff in the dirt, you're actually making sure it goes where it needs to go. That's a good thing.
You don't have to do any of the moving. It doesn't matter whether it's in your garage, your backyard, front yard.
All you have to do is point.
Book online today. 1-800-GOT-JUNK.com.